All right, welcome
Good
everyone.
morning.
It is what is it? Tuesday.
Yes,
Tuesday.
Thursday, not Tuesday.
Oh,
Thursday.
it's Thursday. Wow, wow. I'm so. It is actually
We
Thursday.
went back
Welcome
in
everyone
time.
to Fivers Live Trading Room. It is I and it is LJ. We are here to talk about the markets as always. Are we going to take any trades today? I'm not sure. We got the ECB interest rate decision coming up. We got US CPI. It's December. I got the Santa Claus hat on. LJ has, I don't know what that is. Oh, it's from,
I'm the Grinch.
it's the Grinch. Wow,
Yeah,
nice. I love that.
I couldn't find my reindeer hat, so I'm now
And
the
got the
Grinch
Warcraft 3
instead.
t-shirt on as well. I like that.
Yeah.
Nice. Ah, that's such a good game. And it got even better after playing World of Warcraft. You kind of got back and you started playing Warcraft 3 and you kind of went through the story. A good game. Good game.
Yeah.
I used to play a lot
Dude,
of
prime.
StarCraft
Absolute
2.
prime. Yes.
Yes,
StarCraft
I
as well.
remember.
That was big.
I remember I was living with a roommate. I think that was like one of my first apartments or whatever. And all we did, like we were studying, but we didn't really study. We just took out a loan to study, just to play StarCraft 2, basically. So we were the whole semester, and then ended up with like 20K in student loans and no money made from StarCraft because we had this idea that we're going to become professional StarCraft players, go to South Korea and play in the world the championships over there, which is so incredibly cool. And they have all the houses and everything. So we're like, yeah, we're gonna do that, and yeah, didn't go very well. Didn't make any money. Got left with a massive student loan and no degree at all because we didn't go to school. We just played StarCraft 2 all day. But that was fun. That was good times, fun times. And
I had a Japanese friend that did the exact same, I gotta say. And he, for like 3 years, he'd enroll, pay the money, and then partway through he'd defer, but then just enroll again in the next classes. So he literally didn't even partake, right? It was honestly.
not a
Good
great
times.
idea from a financial point of view. Not great, but lots of memories. It's a fun time. Lots of good
Yeah.
memories. Was it worth it? Yes, 100%. 100% worth it. Would I do it again? Yes, 100%. But I would not recommend anyone else to do it. Like if my son comes to me and says, "Dad, I want to grow up and be a StarCraft 2 player and just waste 3 years of my life doing that," I would say probably not a good idea. But would I do it again? Yes, 100%. All right, so today, I don't even have my screen up, so let me share that. And by the way, guys, this is the last live stream of the week, the last live stream before the massive event that we have next week on Monday. So the Fivers, together with the Trader Pool, is launching an event called the 2026 Trading Prep event. It's set up to help you excel and succeed in trading into the new year. Sign up with the link in the description, and you're also going to get a gift when you sign up, I believe. Like you're going to get a kit, like a trading kit of sorts. I don't know the details of it, but you have to sign up to know. Okay, so do as I say, not as I do. I think that's actually applicable to trading, honestly, because in a lot of these, we have a great example here on Euro USD. What did I tell you guys yesterday? I told you that putting in limit sell orders on the 50% fib with stops above and TP down here would probably give you a good entry. Let's go into the 1 hour. This is what happened. Did I take the trade? No. Did I say that I was going to take the trade? Yes. But this is the thing. Do as I say, not as I do. I think that's something we have to understand in trading as well, because you're going to see a lot of these market analysts, including myself, give good analysis, but then you look at their trading and it's just awful. That's because they're but there's a gap. There's a gap between analysis and trading, and it's always going to be like that because it's theory versus practice. It's the idea of being disciplined versus actually being disciplined. It's, a lot of you are going to wake up the 1st of January with a massive headache. You're going to be anxious and you can say, oh, God, I need to go to the gym. So you're going to buy a gym membership. And then in February, you're going to forget all about that because, you don't have the discipline. And not sure where I was going with that, but I am actually thinking about getting a gym membership. So that's interesting. I got to think about that one.
Getting back to training, Jonathan. Maybe that'll
Yeah,
help.
I definitely need to work out more, get myself moving. It's been a long year, and I broke my foot in beginning of the year, and ever since then it's been it's gone downhill.
That's fair. That's fair. I can
Definitely
relate.
gone
Like,
downhill.
same deal. This is probably been my least active year. I think in my whole life. In fact, I was about to say in the past, since I've been like a young adult, but like, no, obviously as a kid, very active, all that kind of. I think ever. I think it's literally ever. I think I was probably more active at like 2 years old as like a little toddler baby running around, and right now.
Yeah, it sucks, but
Yeah, same
it's a
deal.
good.
Like I had surgery and stuff. It sort of happens, right? Yeah. So yeah,
It's good that we're coming to that realization, and you can't really fix a problem unless you know that it's an actual problem. So I'm looking to get a mountain bike. I was very big with in mountain biking, like probably like 8 years ago or so. I used to do like mountain bike racing. Um, Not in like a top level, but I used to travel around Sweden and join all the mountain bike races that we had here, and I had a pretty good bike. But then it like the suspension broke, and the bike cost like 2.5K at a time when I didn't have a lot of money, and I wouldn't want to spend 2.5K on a bike now. It's that's a
they're
lot of money.
expensive, man.
They're
Yeah,
really expensive. Like if you're gonna buy a new one, like a full suspension, like 29-inch mountain bike, I mean, 2K that's cheap. Like 2K, that's fairly cheap. You're looking at the really good ones, you're gonna pay 3 to 4K. But I'm trying to get a used one, so I'm just waiting for someone to post one that doesn't know the value of it for like 500 to $1,000, and I'm gonna get that. So I'm just waiting for some old lady who had a son, and that son, moved out, left the bike, and she's like, "I want to get rid of this." And I'm like, That's the one I'm looking for."
uh, you're basically
Because
that guy on Facebook Marketplace. Is this still available? And then the massive lowball, like
yeah,
$1,000, and you're like, I'll give you 200. Final offer.
yeah, that's me. That's me.
Yeah.
That's me. And then I drive across the whole country, and then I get there. I'm like, get a lowball it even more.
Yeah.
But look at it; it's got a scratch and all of that.
Like
But yeah,
deduct your
you get it.
fuel and like whatever.
Yeah.
Yeah.
But the thing is, I'm actually not that at all. I'm very very unresponsible or irresponsible when it comes to money. I must say. Which is weird because I'm, supposed to be this, market analyst and trader, and I'm supposed to be good with finances. I'm good with my portfolio. Like I'm good with my trading and my trading portfolio and my company money. But as soon as it hits my personal bank account, you know that clip from South Park, and it's gone.
Yeah.
that's that's my personal finances. So I try to keep as much money as possible in my company because I know that once it hits my personal account, it's gone. Yeah,
Yeah. And so that way you're at least forced to because the tax regime is different, right? So you're like, I can't pull it out.
exactly.
I'll pay more
Exactly.
tax.
I feel like, being an entrepreneur, having your own company, like you're supposed to be like you get it. And I have an accountant, and like that kind of keeps me accountable. That's a good one. Accountant keeps me accountable because he's looking at my accounts like, dude, like what's this? What's this? You put $10,000 into Trump coin. Like what is this? What does this mean? How
Yeah.
yeah. Send them an email. Hey, do you think you can invest the company capital into this altcoin market, low cap? Yeah, okay.
Mendex, Farcoin, Buckcoin, whatever coin.
Exactly. That's a lot of weird altcoins out there.
Yeah.
We got someone asking, "Hey guys, what about gold? I think it's going to be a huge downtrend." What? All right.
What is the definition of huge? Do we mean huge in the next 15 minutes, or what are we talking about?
Yeah, because
Are we
I
talking
I
about
look at
huge in
gold,
terms of
and
days and weeks?
I
Yeah.
looking at gold, I would argue that probably not going to be a huge downtrend. On the weekly, it's an uptrend. On the daily, it's an uptrend. On the 4 hour, it's arguably an uptrend. On the 1 hour, it's still an uptrend locally, but it's kind of like breaking structure here. 15-minute, still strong, but breaking down. So the only thing I can really say about gold here is that unless we break below, I don't know, 4.275, so the range lows, or above here with 4,350, we can't really say much about the future projection of gold. But I do think once we break above this high, because you can clearly see here that this is now the same as all-time high, testing this level. This is basically the same area, the same resistance. So pushing above here, I think we're going to get into new all-time highs, and pushing below the range low puts us in the danger of let me just remove this one right here. Pushing below this one puts us in the danger of kind of like breaking this trend. But on the only thing I can really say about gold here on the low time frames is that it looks like we could potentially come down and test the 4,315 area down in this region right here with that low. But other than that, I think I would be looking for a bullish reaction inside this zone around 4,310 for gold. But it all comes down to what's your time horizon? When are you looking to enter and exit? Are you looking for a day trade or hold it as a swing trade? I think that's the important.
Yeah, exactly.
question.
Because overall, going into next year, yeah, definitely bullish. I would have to say. I think there might be a bit of capitulation at some points because there is some degree of speculative capital that has come into gold, as well as long-term holding, that kind of stuff. So it'll be a bit of a shuffle, like how we've seen when the NASDAQ or S&P has dropped. Right, we've seen some of that flow actually come out of gold, and not because of the kind of the same ways when you have like a systemic shock or some kind of downturn, whether it's a recessionary type stuff or COVID or something like that, like a adverse black swan type shock. You see gold come down first initially, and that's typically to cover margin because larger players are selling good assets to pay for drawdown in stuff like stocks. But we haven't seen that. It's been high correlation, them going up, which has been a very odd, very peculiar environment, particularly with at the same time GDP and growth in the US going up, and then rates coming off, and CPI very low, inflation very low. It's been a very strange combination. That's for sure.
Yeah. So are we thinking that CPI is going to be picking up it kind isn't that the what I'm thinking is, lower interest rates, more money in circulation, inflation higher. Like what that's the relationship, right? At least long term, if they keep that up. But I'm guessing they're now lowering interest rates because they are seeing cracks in the labor market. They want to make sure that the labor market is not weakening more than what it has already done. And let's just hope that inflation doesn't go absolutely crazy. Talking about gold, though,
Yeah,
we said that there's a lot of speculation, more speculators coming into gold. But I must say that the current move that we're seeing is I think from a price action perspective, I think it looks like a very stable uptrend. And what I mean by stable is like here, this move to the upside was just buyers piling into the market. You didn't have a lot of sellers. Of course, you need sellers for the buyers to be buying, but the buyers had huge. They dominated the market right here, and here you're seeing
yeah,
a lot of equilibrium on this move to the upside, because you had first the buyers and sellers reaching agreement or whatever, that this is where we're going to be stopping gold. And you had a big move to the upside once the buyers took control, but then the sellers came in and took it down to the level where the buyers took control, and that's where you have that break and retest. And that's why I believe a break and retest is a good move to get in on in a trending market, because it shows that the buyers are still in control, but you're moving higher in a controlled manner. And I like the fact that gold is back into the scenario that we had recently, with a move up, consolidation, not a move up, consolidation. And it shows that there's not any massive, it doesn't look like a bubble. That's what I'm trying to say. This here,
yeah.
it went parabolic. And we haven't seen that parabolic move just yet. Even on the weekly, it has somewhat calmed down. So I do feel like we did have a reset in the. If we're talking about behavioral finances, this would kind of like be a reset of the human emotions driving the market here. So
Yeah,
I like
especially
what I'm
the drive up towards 3,500. It was very much, government, central banks. There's always the defensive, gradual positioning into gold from, pensions, hedge funds, portfolios, as that like sort of your 1-2%, sometimes up to 5%, whatever. But majority positioning, was from those kind of plays. It wasn't from speculators, hedge funds, leveraged players. Once we'd hit those heights, right, we're at that 3,500 kind of area. Gold on an absolute tear, very much hit public headlines as well. And then it was just like a hot trade. We got that structural break. And so, yeah, a bit more hot money coming in, trying to seek those gains. And yes, we did have that nice drive higher. That was a very technical break, that type of thing. And we had that momentum sustain. But it has been quite healthy, right? I will definitely agree with you there. I think silver, on the other hand, is looking a bit. It's kind of like it's going too hard, too quick down the mountain on a skateboard, right?
yeah.
Kind of feels like it's going to get speed wobbles and kind of crash. Whereas gold's a bit more sensible, right?
Yeah,
So I think gold going into next year, we're definitely still looking at that 5 to 6K, like we talked about. I think.
yeah. I'm looking at silver here, is comparing it to gold. So let me just go in here and change the color, so it's obvious that it's gold we are looking at here. So we got gold in orange here, obviously, and what we see is that gold is still testing. Let me move this a little bit lower. Gold is basically testing this one right here. So the candles, or I can do it like this. So the white line, that's
That, or if
silver.
you bring silver up to that same peak with gold. Yeah.
But you also, what's interesting here is that gold had such stronger momentum leaving this area. So it's almost
Yeah.
like
Yeah.
silver didn't have that
That's where you want to
momentum.
fix. Yeah.
Yeah, so I feel like we want to look at it from this point of view, something like that.
Yeah.
And what we see now is silver completely, but it's also picking up. Like it's silver did not have the expansion that gold had, but it's giving us that expansion now. So it's a weird relationship here. It really is, because yes, it does look like gold is trading here, because silver has pretty much done that high. The low here, that's the same. This is where you have almost perfect confluence, and then you break out here. So I'm not really sure. It
I
seems like there is a lot of so okay, so I have a theory here, and let me try to kind of like, because in my head it sounds very
yeah.
good.
Sure. I know what you mean. Yeah. Yeah.
um
Go for it.
so the run up here, silver had less momentum, but gold had much more momentum, so it created that high. But silver also created a high, but it had lower momentum. So I'm thinking maybe silver is actually not outperforming gold. It's just that gold had this momentum. Maybe, the momentum on gold should have normally been here. So silver was moving with somewhat normal commodity momentum, but gold peaked up here. Um, but gold might as well have peaked here at the same time as silver. So, which means gold would now be in well above all time highs. Yes, silver is outperforming, but if you take the lack of momentum from silver and the extreme momentum from gold, maybe it's kind of evening itself out anyway, even though from a relative price action perspective, if you look at the peaks and the lows, it's outperforming extremely, but from a momentum adjusted point of view, it might not be outperforming that much, which leads me to the idea that I don't like, if gold breaks to new all-time highs and then gets a pullback, I don't think silver is going to come down here. I think silver might actually build a base much higher up
Higher.
than,
Yeah. I
yeah,
agree.
what
Yeah.
people anticipate, because the
Yeah.
the the momentum that we saw on gold here is basically what we're seeing now on silver. So if we compare the momentum for the last year, they're kind of evening itself out right now, which, you know what I'm saying?
Yeah, I know what you're saying. So the thing is, like, silver for quite some time has lagged gold, um, even on the way of gold sort of coming up through the 2K level into the 2.2, 2.3, 2.5, that kind of thing. It's kind of lagged. Now the question is, has it actually lagged, or just the price sort of keeping up in sort of a stair step staggered manner with each other?
Yeah.
Traditionally, I would say it's not really lagging, because the trouble is silver doesn't have the same use case, the same basis as gold does, right? Gold is still used, even though very expensive, in very high end tech, right? Silver is used in some portions of computing, um, medical technology, that kind of stuff, solar panels, these kind of things. But it's at this weird point where it's not quite good enough as far as the use case, utilization case per the cost compared to other metals, which are very close, but like 100 times cheaper. So gold at least is, yes, more expensive, but does have a much better use case as far as conductivity, all that kind of stuff, right? So silver's in this weird, awkward middle sector where no one really likes it because it's too expensive to actually use for something, which you could use it, but it's too expensive. And then it's not really good enough to actually take center stage over anything else. Right, so that's kind of the trouble. And what I don't like about this rally is exactly that. You can see gold is that defensive kind of portion. You've got central banks, governments, everyone else piling in, large gold stores. You have every single fundamental macro narrative, as well as the technical trading structure. And also, even from a commercial aspect, gold is much more favored than like silver as well. So kind of every single kind of use case that you can get for it, it has everything going for it, gold. Where silver is hit miss and you kind of have to justify and kind of squint your eyes to get anywhere with it. And that's what I don't like. And it has ran very hard. You can argue, yes, it's playing some sort of catch up. But like I was saying, I think it's just hot money. After we had those big runs, it got eyes on the sector. And people are looking for where's the other trade in relation to this. And obviously, people are like, okay, I missed out on gold. Let's see if silver plays a catch-up element, just like Ethereum to Bitcoin. That same kind of manner. So,
yeah, that makes sense.
Yeah.
Right. So I have. So I'm going through some macro things here, and we know that the Fed has stopped quantitative tightening. And does it mean that it has so this is something that I know a lot of people are probably wondering as well. This does not mean that we're going into quantitative easing, right? But but does it mean that they're going into a phase of expansion in their balance sheet?
On relative basis, yes. So basically, you pause QE, pause QT, right? You haven't gone into QE, so you're not expanding, but you're just keeping a steady state, right? And there's been a need and a call for that because there's been stress on overnight financing rates and that whole sector, and that still will probably expand in them releasing that liquidity. Will probably be another 6 odd weeks, I would say, till about end January. So therefore, even by that proxy, you should see sustained weakness in the dollar just from that. Now, yeah, it's not the same as QE, but what they have released for that as well, as far as the expansion of liquidity for stuff like SOFR rates from the last Fed meeting, is undoubtedly the most dovish Fed meeting we've had since COVID.
Yeah.
So in about 5 years. Like even if they try, window dress it with like, oh, it's just a technical thing because we're doing this for tax or that or whatever. It's like, okay, you don't need to front run that this many months ahead and all sorts. It seems to have other motives behind it, but you're trying to dress it up to stem fears. Potentially also a attempt to front run a further government shutdown, like I was talking about last time. Because if Trump, they basically kicked the can down the road. No one got anything out of it. The idea was that Trump would extend this and thus get a win. Even the Republicans didn't get a win. So we're now pushing towards the midterms. It's a question of either they choose to not do that because it's going to reflect poorly on the midterms, or they try to throttle something hard to get a win over the Democrats for the midterms or whatever their agenda is. So I think it's kind of we need to do this anyway, and then somewhat of a aspect to provide like that at a time when suffocated of liquidity plus a secondary government and everything else going on in the market, you could get this weird liquidity suffocation event which could drive bonds right up and become sort of disastrous. So you're kind of front running a few possibilities without having to do excessive work, and you can put it under the guise of something that had to be done anyway. So that's kind of what I see it as overall.
Right. I've also read something about how we don't have quantitative easing right now, but there's something called the Reserve Management Operation Purchases, RMOP. Do you know about that?
I haven't heard it referred to as RMOP, but if we're just talking about like for the reserve, like the repos, to get repo rates.
I assume that it has to do with the repo market, right? And I think it's isn't that something that potentially introduced after the financial crisis?
What were we saying it's called? RMOP, just RMOP. What?
RMOP, yeah. So that would be the Reserve Management Operation Purchases.
That's weird because I've never heard it referred to as this. Not directly.
So it got launched in 2019 and apparently got resumed now in 2025. And it says that these purchases are a technical adjustment, not stimulus, to manage the Fed's balance sheet and market liquidity.
Yeah, I was going to say, this is exactly what we were just talking about. So this is to do with the repos. So it's like after we had the first QT back pre-COVID, and we had the taper tantrum at the time. And then, basically like SOFR rates overnight, financing rates jumping up. So it's basically them injecting liquidity for that portion of the market, but it's not directly buying bonds per se, because they're not taking it onto the balance sheet. They're just providing liquidity and financing for banks and institutions to park their money to continue operationally within the economy.
So,
but it's kind of similar, because the thing is, often they end up it's overnight financing, but they end up re-rolling those things continually. So it kind of goes on for some time. So you can argue it's kind of like, just because there's a technical aspect that its stuff is rolled over, it's almost like they're holding it for the duration to a degree, right?
It's really getting into this and trying to understand this. It's very complex.
This is where you get into really difficult weeds of stuff. I mean, even most of the Fed members on the board don't understand how repos and everything fully work. There's only a couple of them that actually fully get it, right? A lot of them are focused in other parts. Even the people that kind of get it don't really get it, and they kind of facilitate and put this together and go like, oh, it's working, all right. Like, it's a very weird, very difficult, unless you've sort of worked in that space and had some kind of experience as well. Even those guys are kind of like, I don't know what's exactly going on, but it's kind of working. And so that's where I've tried to take some of my learning and knowledge from those guys that have had to deal with this stuff. And that's definitely a big takeaway from them as well. So, yeah.
So I've also seen some reports about how inflation might continue to actually surprise to the downside, and that has to do with AI and wage growth. So you have wages potentially not going up as much, and the AI productivity boom in combination of that might help inflation not rise as quickly, which I'm not really
Yeah.
sure. I haven't looked at the details of that, but if that is the case, then we have a scenario basically where the Fed is ending QT, and then in the back end using this RMOP or RMO or whatever it's called. I think it's called RMOP or RMO, which is Reserve Management Operation, whatever. So doing that in the back end and ending QT is not using the words quantitative easing, but it's kinda along the same lines. So if that happens,
it's QE light.
yeah,
Right?
exactly.
It's like soft QE, because if you also look at how much they're pumping out, it's equivalent of like, was it 2.5 or 3 months of QE during COVID? So if they're pumping out that much, it's hard to not kind of call it QE to some degree, right? It's just a soft, it's like a technical adjustment, but it's very close,
Yeah, and if that goes on at the same time as the AI productivity might help, I'm not know the details of that, but apparently it might help inflation stay stable and actually maybe go down instead of like massively to the upside. And to me, that sounds like we have a scenario where we might have bubbles in risk assets. And then all of this together, you look at gold, and people are going to look at this and they're going to say, well, this is something might break here, eventually something might break. So you're looking at gold and thinking, well, if this breaks, then gold is going to explode to the upside, and it's already running to the upside. So people are obviously going to be putting a lot of money in gold at the same time as wanting to ride the trends in equities, right? Because you're going to have a hedge fund, you're going to have money manager basically saying, well, I cannot afford not to ride this move in equities, or I'm just going to lose my job. Because if you have a hedge fund not riding the bubble in equities, then you're going to lose clients, because the clients are going to go to the competitors. But you're also going to be looking at gold, because you want to have gold as a safety buffer, right, within the portfolio. So I think we might have a scenario here where we might see bubbles in risk assets and continued upside on gold. While of course I would assume that I don't understand exactly how this creates weakness for the dollar, but everyone seems to agree that there's dollar weakness.
I would put it this way. So as far as, first simple part of dollar weakness is that the Fed has more room to reduce rates. They've got pressures on, Europe can't, the UK can't, places like Canada potentially looking at possibly increasing rates to a small degree. There was that echoed sentiment with that around Australia. I don't think they'll do that in Australia, because housing that smashes housing here and then hits the consumer way harder, lifting rates here than other countries. Canada, somewhat similar, but there's some slightly different dynamics. Pretty much no one else can except for the Bank of Japan, right? And so as far as that relative differential, the US, the Fed, are pretty much the only major player that really has room to drop rates, right? And the other guys are definitely on hold, and there's potentially a slight tilt to on hold for longer, and then some of the lesser players potentially like a slight uptick, or at least rhetoric around that they're looking at it. Now, as far as the defensive asset type thing, and you're talking about bubbles, I don't think we'll necessarily get a bubble, but I think people definitely haven't cottoned on to the fact that we're in a slightly different age these days as far as like things like valuations and like PE ratios. There's so much liquidity, so much dollars out there that's being pumped out, and it's all gone into financial assets. And then it doesn't flow into the real economy so much. That's why people are not getting wage increases. We got this K-shaped economy thing, however you do it, K. And And so the top end of town making a lot of money, they also make up the majority of consumer spending. Lower end of town having a hard time. Now, as well as far as earnings, that means company earnings are going to be slightly less, but their asset prices go, rocket ship. Because these people as well, when they get a certain amount of money, yes, they're majority of consumer spending, but because they are intelligent or sophisticated or have the excess capacity to do so, they pump a lot of that back into financial assets, which keeps it floating higher. Now, if you look at some kind of wobble, you look at bonds, right? So rates would need to go down. So bonds would increase. However, if you then have concerns around the future of growth, do you want to buy bonds? Because you're probably going to say, I want to be paid significantly more in terms of the interest rate on the bond to hold this asset as far as the risk. So you're not going to buy it. So if that's kind of the general census, then no one's going to buy it. So rates sort of go higher, which creates a further problem for central banks once they're trying to reduce rates, and you got the long end going up, and this is where you get the yield curve shift and inversion. And then at the same time, you got the stock market coming off because people have scares about growth or bubbles or AI, or is it going to produce GDP or all this kind of, is it going to actually work? The whole thing kind of looks like a mess there. And you look at gold and you're like, all right, that works. Because apparently rates are going to zero anyway. So that's better as far as a non-interest bearing asset. It's got the protective values. Governments are buying it. Central banks are buying it. And the other trouble with the bonds is even if you buy the bond at a higher rate and it does come off, you're going to get diluted by the increase of QE and total money supply over time, over the duration of you holding the bond, that yes, you might even be getting a good rate, but you're being diluted by the denominator of how much money is going to the system. And then so that's where it kind of sucks. And the only way for you to bet that that's going to work out well is if the AI thing delivers, of which stocks crashed, of which you go, okay, then I need to bet on that it's just going to be okay and work out, which means you wouldn't even buy that. You just buy stocks anyway on the dip and it goes up, right? So it's this weird conundrum right there where there's this huge pot of traditional markets that just ends up being this basket of kind of confusion to a degree. Like you're taking a lot of assumptions in it. And then gold very much, as an aside, looks quite clear. And even in the worst outcome, say everything does go quite well, gold should still perform on a relative, like healthy basis. Maybe it won't be, the insane gains we've seen, but it will still be healthy, and you won't be upset with holding it. So that's kind of seems to be the general argument once you break everything down that you can see going forward. And I think that's exactly why we've seen the huge jump towards the asset, especially on the back of governments and central banks as well, giving that underpinning.
So there's one aspect here that I don't really have a lot of knowledge on, and that is the bond market and the bonds. I mean, I know the basics and the foundation for how it works and why you want to buy bonds and why the government want you to buy bonds. You're basically, it's a way for, you're buying bonds to kind of like invest in the government. It's a way to fund the government in a sense, and then you're getting paid the interest on the bonds, and the higher the interest rate is, the higher the interest you're getting on bonds. But then, as you said, you might buy the bonds at high interest, and if you're holding the bonds for too long and inflation is too high, then the money supply becomes so diluted that the money that you're holding in the bonds, because of inflation, is going to be worth less when it's actually time to get paid the premium on the or the coupon or whatever it's called on the bonds. And traditionally, this is something that a lot of people have been talking about, including Darius Dale from 42 Macro, talking about how that 60-40 allocation in stocks and bonds, it might not be the best going forward, because we're seeing a scenario just like you described, where it's difficult to see a scenario where bonds is the best investment, you know?
Yeah.
Uh, and and
So
and
similar when you talk about consumers and you have like real adjusted returns versus just looking at raw returns. You got to reduce by inflation everything, so you can have positive returns or GDP or etc. But adjusted returns are actually technically negative because of inflation or other components, right? And so that's basically what it's looking at. But yeah, continue. Sorry, I didn't mean to interrupt.
that's good. We have a question here. Are you guys going to discuss Forex too? Well, this is, what we're talking about here is just going through some ideas here
This
in
goes
macro.
massively into next year for FX because this is going to be the majority driving factor. So for you guys to understand,
Yeah,
these are the underlying things that drive the not just FX, like the entire global financial system, banking,
exactly.
mortgages, literally everything, and then that is what flows into FX and actually creates these movements, right? Euro dollar early in the year we were sitting at 104, and we're now sitting up at 117. We're not at 117 by
Yeah.
accident because there was a triangle that broke on a technical basis and it just decided to go up, right? These are fundamental structural flows from large monetary financial system of the globe that has shifted in a new direction. So this is sort of mapping out some of that overall. So obviously, if this stuff is a bit more in depth overall, but hopefully you guys can start to pick up bits and pieces of this and sort of understand why we actually move from here to here or wherever. Day to day, that's a different thing. But once you look at over a month, 2 months, you can start to understand overall direction, and then hence you could go from 112 and understand that that's going to be the shift over the next 6 months. And when you move from like 112 up to 117, you know that you're going to keep buying the dips and run that the whole way because you've understood and learnt that prior structure that is going on that is actually materially moving the entire system, and then that assists your trading right there. So
Why I'm interested in this is because I'm the whole
give me
like the whole
1
reason
second.
for me to doing.
Here.
Yeah. So for you guys listening here, one of the main reasons why I'm interested in these types of conversation when it comes to the macro fundamentals of how the whole financial system works and what's happening right now is I look at the markets from the perspective of cycles and the way that the markets move through periods of low volatility, high volatility, low liquidity, high liquidity. It moves between cycles of fear and greed. It moves between cycles of depression and euphoria. And the cycles are always going to be moving from or the markets are always going to be moving from one extreme to the other. And one way of identifying when a new cycle is born or when a new bubble is born is to understand where you have the beginning of the cycle or the beginning of a bubble, which is the displacement phase. In the displacement phase, you have a shock to the system, right? So you have a massive change to the status quo. And it's important to understand where we are in the current macro theme of things to understand when something is changing. Because if you have no idea about fundamentals, then you have no idea when things are breaking, when things are changing, right? But one thing we know is that markets move from the extreme tops to the extreme bottoms, where you have, for example, quantitative easing, quantitative tightening. You can have things like massive depression, capitulation, euphoria, right? And to pinpoint where we might be in this cycle, not pinpoint like are we here or are we here. What I mean is where are we in relationship to the tops and the bottoms. For example, now that we've seen that the Fed is stopping quantitative tightening, we could say that we're now looking at a scenario where we are somewhere around this level. And if we are somewhere around this level, then that means we are potentially going to see the continuation or the start of a new trend or a new bubble or a new cycle. So, looking at this from the lens of price action in the forex market, and this is what I'm very fascinated about the markets, and one of the reasons why I'm in the markets in the first place is the whole idea of the like I've been very fascinated my whole life about um, the hidden parts of nature, the things in nature that governs our universe without us really feeling it or understanding it individually. But then when you look at it from a crowd perspective, you see that we all follow the same patterns from a you talk about the fourth turning from a generational point of view. We all follow a similar pattern. Uh, you can see that in nature you have the Fibonacci sequence dictating how certain animals evolve and things like that. And you have, of course, in behavioral finances, you have these ideas that we are just crowd uh, beings that moves with the crowd. And this
Yeah,
is
so
in
it's
some
it,
cases,
it's it's like finding science, right? Because
yeah,
you're observing certain repetitive things that seem to keep happening, and now you're trying to put down some kind of groundwork and fundamental reasoning, actually discover why, or at least translate it in human language per se, to be able to interpret and predict these things on an ongoing basis to the best capacity you can. Just like math, science, physics, right? You know, you start to observe, yeah, there's these things that happen all the time. You build laws, and then you can, make forward predictions, trajectories, that kind of stuff.
yeah, exactly.
So
And
it's trying to
what I
apply
what,
science to it. Yeah,
yeah, and what I try
to agree.
to identify within my trading is the um, the cyclical moves of the market. And here we have your USD as a line chart overlaid with a basic sine wave pattern. And what I'm trying to see, and this is my whole trading philosophy basically, is try to identify the tops and the bottoms of a cycle and have it somewhat be in relationship with a sine wave like this one. So for example, you can see that if now I need to do more analysis on this to actually have a correct cycle analysis, but if we look at this as being a high of the cycle and that being the low of the cycle, I try to identify, okay, did something happen here that would justify this as being a paradigm shift or a proper change in the overall cycle dynamics? And might not be the case, but we do know that something did happen around this time right here, because that huge move to the downside caused by um, was that what happened here in
What
20.
date was that? 2021, September
Yeah,
27, 2021, euro dollar. Uh, Brain, I think that was around divergence with the ECB and the Fed. And then also we had ongoing stuff with Ukraine. It was Ukraine.
right. Yeah.
It
So
was Ukraine at that
trying
time.
to understand,
Specifically.
where the highs and the lows are, identify where you have a cyclical shift in a market, and then identifying that as a cycle high or cycle low, and then looking at where are we in terms of the cycle, and then looking at markets from a purely a sine wave perspective, where if we are at a historic low and we're seeing signs of a potential shift in the overall condition, then we might say that this might be the end of the cycle. We might see a new cycle emerging. And I think that is just a fascinating part of markets, because you'll see that they do fluctuate between these extremes. And that's one of the reasons why I went into the CMT program in the first place, because I wanted to first of all get the title from a professional point of view, but also to specialize in these cycle analysis, and to really understand the cycles in the market. You need to have a framework of more of a fusion analysis point of view. And in fusion analysis, what you have is you have fundamental analysis, you have technical analysis, and then you have, I believe it's behavioral economics and quantitative analysis. So those four things goes into fusion analysis. And usually what you have is you have firms where you have multiple different analysts working on one of these things, but I want to try to develop a framework to work on all of these four different things. So from the macro point of view, basically what you're looking at is you're looking at government policy and central bank policies. That's really all. And then you add a little bit of geopoliticals into that. And that's really all. That's the three things I would argue you need to know to understand where we are in that cycle. And then from a technical point of view, of course, it's all the technical analysis. From a behavioral point of view, you're looking at sentiment, right? You're looking at are people happy? Are they sad? Are they depressed? Are they euphoric? And then from a quantitative point of view, you're looking at just the numbers. You're looking at just the systematic trading systems where you have signals that might say could be based on moving averages or mean reversion strategy, whatever.
Options finance, like quant stuff is going to typically get more into that options statistics type realm.
Yeah.
Right. Yeah.
So like maybe option prices and things like that I really need to like. That's going to be my next thing that I need to understand. But I'm hoping also with the development of AI that I don't have to just let it work for me on that.
Working on some stuff with Dirk. He's mainly been doing right now. I actually still have to have a look at some of the further stuff, but
nice.
Yeah, I'll see where we get and see if we can share it with you as well.
So now, what really got me interested in this, and I started rereading the book. It's a book called the Law of Vibration by Tony Plummer, and it talks about the hidden forces in nature, and he argues that the markets do not move randomly, which I think is obvious, and that the markets, they follow a specific pattern of oscillation that governs basically all change and evolution in the universe. And this pattern that he talks about can be found in price movements, economic cycles, and in nature itself. And what's really cool about this book is that, and listen, I know it's like it's far out there, but this guy is like a proper trader. He has the credentials. I think when he wrote this book and actually released this book, he became something else in the eyes of many, because this is very esoteric and very much out there. But basically, he spent 20 years researching what he believes is ancient knowledge that was deliberately hidden by two figures. The first one is William D. Gann. We know him, W.D. Gann, which is a legendary stock trader. And then you have a guy called George Gurdjieff or something like that. I can't pronounce his last name, but it's a spiritual teacher, right? And both of these men conceal this pattern in the structure of two books that they released. The books are fictional. It's really, really bad. They are horrible books. But when you look at the books and you measure things like the numbers of pages and the space in between the text and everything, you'll see that it aligns very well with the Fibonacci sequence. And it's gonna.
Johnson, come on, man. What are we doing? What's
No,
this?
this is
We're
real,
doing some Da
dude. This
Vinci
is
Code
real.
thing.
Yeah, yeah, for
Like,
real. This is real, dude. You gotta read this book. Okay, you have to read this book. Now, what's cool about this is that this Tony Plummer has used, the art of looking at certain characters as numbers, so certain letters, numbers. I don't know what that's called, geometrica or something like that. It's how you apply secret meanings to words, right? So you have a word, and listen. You have a word, and each
I'm
of the
laughing at this.
letters. It so you have a word, and each of the letters in this word has a specific mathematical meaning. So you can hide certain things in. And what's really cool is that this same pattern, listen to this, this is crazy. Okay, so this same pattern, and both of these people, they say that it's from an ancient scripture. They have found this pattern in an ancient scripture, and the same pattern can be found in Saint Matthew's Gospel in the Bible. Okay, and
Okay.
then you take this
Okay.
information, and what Tony has done is he has applied this to the market, and he has found that what William D. Gann discovered is something called the law of seven, or the law of vibration, that dictates a lot of the things in the universe, including the markets. And when he overlaid this to markets like the Dow Jones, etc., it predicts and can basically predicts the cycles of the markets. It's really really good. And
Okay, Johnson.
I yeah,
Are you being serious or are you taking the piss?
I'm
As a
100%
genuine
serious.
question.
No,
Okay. All right.
I'm
Sorry, I
100%
didn't.
serious.
So,
This book
I,
is
I, I will tell you though. Do you know how this stuff works? Stuff like the Da Vinci Code. Is that right?
no,
Right.
what do
Because
you mean?
you're basically taking a large enough sample set that you can find all these small variables, because there's only X number of variables that cross correlate and then link them all together,
This is
right?
a good that's a good comment.
Yeah. It's the same. It's kind of the same thing as like, was it 6 degrees of separation or 3 degrees of separation? People use both, right? And all of a sudden you're now linked to Obama, right? You've got enough plot points, but they obfuscate and eliminate the rest of them, right? And then you just show what you want to see, and then you get that. I'm sorry. My math and physics brain is hurting right now.
But I think I
My
think
apologies.
if you would you read the book?
Yeah, sure. I'd read it, and if you want me to bring it back to a kind of scientific thing of sort of, it's almost like the three body problem, right? Okay, uh, so the three body problem is basically when you have like two objects or two entities or two variables or whatever you're talking about. It's pretty easy to, uh, you know, find out what the next conclusion is going to be, and even the nth conclusions, that kind of stuff. So the same way in markets is similar to that there's buy and sell, right? Now, where it gets a bit complicated, and this is where you start going towards science, where you get like chaos theory and stuff, which is basically pretty much what three body problem pretty much is, in simple terms. Uh, the buy and sell, you also have other variables like to what degree did they profit or loss, and what was the leverage, and because a lot of these contracts are kind of arbitrary, like leverage is kind of arbitrary exposure. Then you've got commission fees. Everyone's paying slightly different commission fees, slippage, that kind of thing, right? So then that creates a further expansion, but you still do have the primary base of buy and sell. And so the same way that like if you're playing pool, right, and the first shot you can easily deduce that by, I forget what the exact math is. Someone else can correct me on this, but the 12th shot in a game of pool or something, I don't know, it's the 12th or 22nd or something. You need in order to predict that mathematically, you need to know the position of every single particle to the edge of the universe has a pull effect gravitationally on this pool table right here, right? I forget what the exact calculation. I did this ages ago, but that's kind of where it goes rampant. So then they sort of pick and choose the stuff that looks good, and it's like a line of best fit. It's almost like getting a bell curve, and then ignoring the fat tails and the that kind of stuff. But I will read it. I'll definitely read it. Send it to me and I'll read it.
Yeah, it's I gotta see if I can find it, and I got the physical book. But I get what you're saying. I get what you're saying, but it's not.
I just see all these things all the time where people pop onto like novel stuff like that, and it seems like insane. But then if you've got like you apply a little bit of math, statistics type knowledge, and it actually breaks down sort of almost mystical, magical stuff, and you're like, oh, actually, it's just kind of technically just this, right? Yeah.
Well, I think if you read the book and you look
I'll
at
still read it. I'll still read it.
and you look at the research that has been done, which I must say is quite a good some good research from my point of view, but you might have a different view of that. But and then it's also of course the indicators based on Gann's ideas or the theories that he's talking about, and he had, if there was independent research on Gann's trading in like 1909, which is a long time ago, obviously, but there was, they actually did look at his actual trading, came to the conclusion that it had like a 95% win rate over his trading career. The interesting thing here, and this is something I have to be thinking about from the perspective where I'm very skeptical of today's trading influencers. You have to understand that back then people were also very interested in trading the stock market and making money. So the guy apparently had I think it's not, maybe 92% win rate over his career, which is insane. But after his death, he left no money. He had no money. So where's the money? And that's my issue with this. Is like he's supposed to be one of the most legendary traders ever, but he had no money. Isn't that a bit problematic?
Yeah, well, I mean, win rate and return aren't equal, right? I mean, it's one of those common misconceptions that people think like if a bank made money on 365 days out of, or 364 out of 365, that's a good sign. That's a red flag. That's really bad. Because that means
Yeah.
often the one day they didn't make money, they lost 90 whatever plus percent, right? And so the same way that firms are around for 30, 40 years and they've made money year on year on year on year on year on year, and then they blow up and lose all the money they made for the past 3 decades and some, and then they're gone. Go back to the Russia default 1998, where there were a bunch of bond traders saying like, okay, well, these bonds are trading at fair value. That wouldn't make sense for Russia to not print money or pay the obligations and the dues or whatever on those bonds. And everyone was saying this and they kept buying into it, and then the market just drove it to zero. And they ignored the fact that, Russia wasn't even paying its own military, of all things, which you would think is, the last thing they stopped paying, being Russia in particular, right? But yeah, and then they all blew up. Right.
Yeah, and just gonna pull up this comment. I think this is actually a valid comment because so the
Yeah, and there's also that he could also have all sorts of other stuff going on. Right?
Yeah, I mean, Gann did, I believe, write books, but the thing is, the book that Gann wrote called through the air through the tunnel, or the air through the tunnel. It's a really it's a horrible book. Like, it makes no sense. The only reason for him to write that book is to hide secret meanings within the book. Like that's the whole reason for him to write the book, because it makes no sense. So, and then what's interesting is that there's another book released 50 years before this book that had the same purpose. And at the time, those two people probably had nothing to do with each other. And both of these books goes back to that one passage in the Bible, which is, so the work that Tony has done is extensive. I mean, he's also, he's been in the market for 40 years. He's been a, director at a big bank. Like, he's a proper, analyst. But the thing is, what I'm thinking here as well is, he might have been good doing good research, and he's been connecting all of these dots, and it's very interesting, but it might just be the case that Gann found a theory that is interesting, and he found a theory that he thought people will enjoy. So he's marketing that, and he's saying, I'm
Yeah.
successful because I know the secret of the universe. I know the secret exactly like ICT. So the issue I'm having here is, is Gann just a big fraud, just like ICT? Because
It's a
ICT basically,
causation correlation type thing, right?
yeah,
Almost the same thing with a trade strat, like you were saying with ICT. Over a certain period, it can show profitability. You run it under duress, under difficulty, under different market regimes that didn't play out just the past history, and then it falls apart, right? So the same way that I could get a stock that is perfectly correlated with the length of women's skirts in Mongolia. Does that mean that is going to determine the stock price going forward? No, but you're cherry picking data to make it look good.
yeah.
Right? And then that's it's a correlation causation type issue.
Okay, so
Yeah.
well, okay, so this is also a very interesting comment right here, because I'm gonna say Gurdjieff. I'm just gonna say Gurdjieff. I don't have no idea how to pronounce that, but let's just say Gurdjieff. If his book is correct, and if it's worth studying him and his book for cycle theory, then W.D. Gann is also correct, and it's worth studying him and cycle theory, because it's basically the same thing. It's saying the same things. It comes to the exact same conclusion. Now, what's interesting is that maybe what they're talking about is true, but they found this, or maybe it is something that is because the whole theory of the book is to present an alternative theory to market the current efficient market hypothesis, right? We need a new theory that talks about the markets in a way where it's not static, like because the modern theories of how the markets work doesn't incorporate behavioral economics as much as it might or should do, right? And this theory basically talks about how there's a pattern in how humans behave, and how that kind of translate into the whole nature of the universe. And it's a universal pattern of like a cyclical pattern in the way the world works, basically.
Yeah. Okay, so I'll put it in this way that yes, correct. The trouble is, okay, it's an example of difference between uh, randomness and knowledge, right? So when you're trading, you're technically trading like applied randomness, right? Because there's a certain degree of things like behavioral economics, people, mass psychology, that kind of stuff. You're never going to be able to quantify that entirely in any kind of rigorous capacity, right? Even as an individual human, if you just focus on one single human, you're never going to get them perfectly right? The brain is too complex, too many neurons, too many bits and pieces going on at all times. And so it's equivalent to randomness, right? That's basically what randomness is basically unknowledge, right? You cannot possibly know this as a human, as us. It's just there's too much information. It's too impossible. It's too opaque, right? So it's practiced randomness. That's basically unknowledge, right? So if you somehow had perfect knowledge, you could compute everything. It's almost the same way as in physics. If you had the perfect position of every single particle in the universe, you could predict the future of if you could triangulate exactly where everything is. And the same way in your brain, you could triangulate every single neuron, every single synapse, where they're currently firing, the location, the current form, activity, quality of them, all that kind of stuff. Then you could predict someone's next perfect action in real time. But just, at least not in our current capacity, we're nowhere near that kind of technological advancement that we can get anywhere near there, right? So that's pretty much what that is, and that's kind of what markets is, right? Because there's always going to be a degree of randomness that you can never quite get to. No matter how much quant finance, how much whatever you do, you can't get perfect knowledge, no matter what.
But that's not what we're talking about. We're not talking about perfect knowledge. We are. It's just the same way as in cycle theory. We're talking about how a cycle high or cycle low is the translation of cycles, where one might be left or right, having left or right translation, which basically means they're topping out earlier or bottoming out earlier, and that's in some ways. I don't know if it's random, but it's unpredictable. It is very difficult to predict when it's going to happen, and to a
Yeah.
sense might be random. But the overall structure and the overall pulse of the market or whatever, based on human psychology, seems to be following certain patterns. And
Yeah, that's what I was basically saying. So it does follow certain patterns technically, but you would need such a vast swath of information and points that is essentially equivalent to randomness, because you will never quite get that discrete level of information, right? So, it's applied randomness with that because of things like biological behavioral finance, that kind of stuff. Someone wakes up, they're kind of angry, they're upset or something, they decide to full port the market, even if they work at a bank or whatever it is, just because, right? And that's not going to fit anything rational.
Wait, so you're crushing my dreams here.
so what if so you're basically saying that, so everything's just random. There's no structure to the universe. There's no there's no magic. Basically, it's just random. Everything. There's nothing there.
No, it's not random, but it's random per you as an individual, as a human, your capacity to get close to the finality of the true answer. So you have to do the best with what you have. So it's applied randomness, because essentially what randomness is unknowledge, right? If you're a bookie, right, and you run a gambling company, you're not gambling. You got full data sets. You've mapped all of this stuff out quantitatively, everything. You're running the book. You're not gambling. They're the house, right? But for the people engaging in the service, right, for them, there's a degree of unknowledge, some kind of speculation, some kind of randomness, where they're not necessarily either sophisticated enough or privy to the underlying information that the bookie has, which is why they're able to price whatever service they're offering, say the gamble in this element, at that level. So the difference between something like a gamble and you taking a risk, there's various levels, but it's always degrees of knowledge and information. So most people, for instance, when they turn up to like a casino, as an example, They don't fully understand how the games work or what the best hands in blackjack are, what's the minimum number for you to beat the house or whatever. And they just kind of throw cards that kind of look good and they think it's good versus knowing it's good. And the house knows it's good. So the same thing with this stuff. The variable list is so large and you're never going to quite get there, obviously. So you have to do the best with like this tiny amount you have out of that and just hope that you're slightly better than the other people. And the thing where certain patterns come out is that technically, if you could run the list of all of this data, if you were somehow privy to it, you could come out with a functioning algorithm or whatever that would tell you what would happen next. It's just we ourselves are never going to get that. The same way that your brain functions, your heart keeps pumping, all the bits biologically, even that we can't map ourselves, right? I think the first the first animal was like a random worm that we mapped, which had 100 neurons or something, whatever. Once you do the complexity of the neurons linking to, I forget what it was exactly, but it goes to the power of like you increase it by like another 1 neuron, and it goes up by 10 billion in like complexity.
So basically,
this is where you get to like supercomputer AGI, ASI level stuff as a bare minimum to try and compute or understand these types of things.
So basically, what we're saying is, if you have enough information, you're going to find patterns, even if those patterns doesn't really just because you see patterns in the information doesn't mean it's an underlying foundation of the information.
Because technically, you're probably ignoring 99% of everything else that was there, and you're just taking what was observed.
But okay, so if we look at it from this perspective, because we look at how life evolves, and life evolves through through the mutations. We have the I can't forget. I actually forgot it, but. And I can't believe I did. But what's the underlying, force of evolution? It's what is it called?
What do you mean? Survival?
When there's a like basically survival of the fittest. Like when there's a mutation, and that mutation is good for the species, that mutation continues to live within that species. What is it called? You guys in the comment know. Let me know in the comments.
Yeah, well, what do you mean? Yeah, because it's survival of the fittest, but it's not the most fittest. It's the most fit to the current
it's the survival of the most adaptable, but usually you say survival of the fittest. But it's the oh my god, I can't believe I forget.
I can't think of what you're trying to say then.
Well, okay, let me ask Claude then, because apparently Claude should know this. Okay, so let me ask Claude right now. What is the underlying force of the?
Well, because the underlying force is going to be the environment, and then it's whether you can adapt to that. So similar to you have a trading strategy, right? And the regime changes, and can you adapt your strategy over time with that, or do you get killed along the way?
But what I'm looking for is natural selection. So species are being evolved through the process of natural selection. Yeah, that's what I'm looking at, right?
That's the most obvious thing. That's probably why I couldn't think of it then. It's like,
yeah, exactly. So through natural selection, you have things like seashells developing in a way where it has found the most efficient way to adapt to its environment, and that has shown to be, we see a lot of relationship to the golden ratio, for example, in things like how a sunflower has been developed through the forces of natural selection, as well as seashells. So, how can we not say that there is some type of pattern to development of life where we can see patterns in from, for example, the Fibonacci sequence in the development of life through a random process? Because natural selection is random; it's from random mutations, but you still see a pattern in that.
It's random, but it does have like it's random in terms of unknowledge of how it got there, but it's not random in terms of the happening process that coalesced to forge that outcome. Almost like you have the periodic table, and you don't have like carbon atoms or gold or something forming randomly, right? There's a certain process. But then if you're going to try and guess where you find a gold mine deposit in Africa or Australia or somewhere on the planet, you're going to try and guess where this originated from. That's unknowledge, but you do have a degree of, obviously we've extrapolated that and can know that it came from a star and you need these certain conditions to compress that much energy to combine the electrons and everything, and you form this new thing. So I was just going to bring up this. So it's like I just said is that any interpretation he or anyone else has on the markets are random guesses under the illusion of knowledge and analysis. So that's the thing. It's the illusion of knowledge and analysis. So they're not totally.
But that's
random.
I'm not. When I'm taking a trade, I'm basically trading based on an illusion.
Yeah, it's an illusion in terms of you personally believe that your decision right now is made on the best bet of all possible available knowledge you have or can manage to grasp in front of you.
But that's not true though, because I take a decision in the market, and I absolutely know that I'm not the smartest person in the room, and I absolutely know that I'm not making this decision on all the available knowledge, and I do appreciate that I'm not
You're making
smart.
it on the available knowledge that you have, not all of our available knowledge possible, but the available knowledge that you currently have, and then you make your best assumption under that given knowledge, and then you decipher a process. So this is the same thing when people say when you made a wrong decision, for instance, trading, because the outcome after was negative. That doesn't mean it was a wrong decision, because per every single piece of available information that you could possibly find or gather prior to that told you that this is a reasonable outcome, right? So you can't be reprimanded for that, given that you did take all of that into account. If you didn't take it into account, that's another question. But assuming you did take all that into account, and then you made the step forward anyway, and then you lost, clearly there was something that was out of your purview that you couldn't have accounted for. You accounted for all possible information. Almost in the same way that if you walked outside right now, walked down the road and got hit by a car, on how many other days of your entire year,
you off discussion if I got hit by a car. Yeah.
Yeah. But if you walked out there, no one would blame you like, oh, you made a mistake or an error because you managed to get hit by a car, right? It would be like, okay, any reasonable person would walk down to the shop right now, get their groceries and come back. And that would be a reasonable assumption per all information, per the number of people that get hit by cars, per the general track that cars are meant to run on, per that pedestrians walk on a different set, per speed limits, per, right? It'd be reasonable and sensible to expect that you're going to walk out there and not get hit by a car right now. So kind of the same thing in trading. There are other prior conditions that you don't know that guy had been drinking 2 or 3 hours before, got into a fight with his girlfriend, decided to drive home. Then there was another car that cut him off and he got angry and he sped the light, and now he went off the road and hit you. right?
So
That's that kind of knowledge that you're not kind of going to get that exposure
so I
to.
do
Yeah,
appreciate I do appreciate that
if
you're
that makes sense.
much more knowledgeable when it comes to probably, the idea of randomness and the probabilistic thinking, and I'm not going to assume that I have even close to all the answers to a discussion like this. It's a very interesting discussion though, but I think we are I still think about it in a way where what you're talking about is basically random occurrences, right? We have random occurrences, and we can't know if our trade is going to be successful or not because we don't have access to all the information. We're never going to have access to all the information, so it's just a matter of probabilities. But I do also think that it's two different discussions. You can have randomness within an organized system, so you can have random events living within a system of order, right? So even though that there's some type of pattern in the way that humans work, you can have one of those individual humans within this pattern acting on complete randomness, but looking at the law of big numbers, you're going to see a pattern, and that pattern might repeat itself. But you're saying that there's no patterns. If there is a pattern, it's completely random, and it's just basically like you're doing data mining and you're developing a trading system on backtesting data. You're basically curve fitting. So it's everything every type of pattern that you find in nature is basically just you having the illusion of analysis or knowledge.
Yes, but no, because they do reoccur because of the recursive nature of the, say, it's human being as an example, right? You get some singular human beings that are very impactful to what happens to everyone. Now, human beings by nature, whether you go back 100, 500,000, 2,000, 5,000 years, or go forward the same direction, will probably be about the same in nature and character, right? People sometimes forget or think that we were different 2,000 years ago, but we're the same people. We just had different stuff around us. And that's why you keep seeing the same repetitive things happen in history. So from that aspect, you have certain, if you want to view them almost as constants, right? A constant insofar as that evolution is over a very long time period, that it's almost equivalent to like if you're trying to measure it, you're measuring one, and then you're measuring like 1.00000001 or something. The measurement is almost going to come out to the same calculation at the end. So hence you see these same things repeat over time eventually. And then you have the dilution of all the other people that have the pull and push, and the same with nature. Get esoteric again, planets, solar system, universe, that kind of stuff. But yeah, so it's not, it's what I'm saying is it, at least from our understanding, is not totally random. We use things like math, physics, statistics, that kind of stuff, to the same way that we use language, like English, to communicate certain ideas. Now, whether these are fundamental truths of the universe or not, we don't know, but that's our best way of communicating what we are observing happening in front of us in real time, and then trying to amass as much possible understanding as we can all together and put it into one big system. All right, so that's kind of what it is. So whether it is totally random, whether it's not, now you're getting into, are we in a simulation? Are we not? Are they fixed rules? Are they rules that change over time, or something strange like that? You start to get into quantum theory, and then everything goes spaghetti once
All
again.
right, but
Right?
would it make sense?
So yeah, it's very esoteric.
But would it make sense though to say that, okay, so let's assume that we're in a simulation, and if we are in a simulation, would things that we've discussed here to find a pattern, would that make sense? Because if only changing is the variable that to say yes we are in a simulation, if that's the only thing we need to change to be able to say that yeah it now makes sense to have a pattern, then you know does it really make any does it matter? You know what I mean?
Well,
Because we don't know if we're in a simulation or not, so having a pattern might just be true or not true at the same time.
yeah, but then as far as at least specifically the simulation point, you got to assume then that the parameters have been set for you, and then you can kind of assume whether it's a humanistic input or not. But you have to assume that they could be changed at any time as well, and both either to stay the same, change forward, or even change backwards as well. So that's where it gets odd. Put that way.
I don't think it's odd at all. I don't think it's odd at all.
Yeah.
I think
basically the question is Santa real, guys? That's what we're getting to.
Well, apparently, obviously it is. Obviously he is real. I don't really know what you're talking about here. Santa is real, and that's at least what I've heard and what I've gotten to know.
But it is. I will say this: it is a good general topic of thought. As much as some of you guys might not think these kind of, I don't know, it's kind of strange abstract path that we got onto, but this is essentially what a lot of quantitative finance is kind of built out of. It's
Yeah.
They go for people from physics, mathematics type backgrounds, build this stuff out. They understand all that stuff in depth, and you apply the same systems. And it's more, science is more a way of thinking rather than like a doing or applicative type thing. It's the way in which you think, right? Rather than, even though people view science as like a raw, rules based, fixed 100% thing, it's actually very much more playful and arbitrary, and that's what you actually need. And the same thing in quant finance, which these days drives everything pretty much. Banking, hedge funds, blah blah blah, right? So
yeah. So what I'm trying to what I'm trying to do here is just first of all completely reject the idea that there is a not necessarily hidden meaning or hidden pattern, but a pattern, just a pattern. Like I want to be able to reject the notion that there is a pattern driving global markets because it's driving human nature and human behavior. And obviously you're the right person to talk to because you think not opposite to me, but you would be the type of person to reject that idea. And that's the whole idea with scientific experiments. We want to reject the hypothesis, right? That's the whole premise. When you have a scientific hypothesis, what you want to do is you want to reject it, and then if you can't reject it, then it needs to. Then it's true unless you reject it.
It's
so
theory, but it's
a theory, right?
Yeah.
But a scientific theory can never be proven. It can only be rejected or not rejected. So my idea here from that point of view is to say, okay, I need to reject the idea that there is a repeatable pattern in the universe, which then translates into the development of life and development of humans, and therefore development of human psychology in crowds, and that is what drives the market, and therefore there is a pattern in the markets. And if I can reject that notion, then I'll focus on something else.
You'd be better off following the thing of people, but not 100% translating that to markets. So I think that's my problem, because markets change through each regime very differently, and they're completely different. Like to now versus 1950s, totally different. 50s to the 60s to the 70s to the 80s to the 90s, taxation, governments, central banking, private company, like every, technology, every single aspect is completely different. What is more consistent is humans. So hence things like the fourth turning, like we have talked about, that is something I do respect, because yes, that is something that is a human factor, and our genetics, our genes are still the same as, thousands of years ago. We're going to repeat the same stuff, and that's just how it is. And you tend to go in those cycles. So that's something more you can rely on, but it's the second derivative of applying the current regime of markets, governance, private finance, and the rest on top of that layer one, per se. You're going to get a very skewed outcome from the back. So what I would say, I'm pretty sure I've recommended these books to you before, like Nassim Taleb. Right?
Yeah, the Black Swan dude.
Yeah. So Black Swan, Fooled by Randomness, in particular. That's one that sort of talks about this stuff. Fooled by Randomness, which talks about a bunch of these sort of correlation, causation type aspects like that. Those would be two of my best reads. Now, Nassim Taleb, very brilliant guy. I like him. He's an absolute twat on Twitter, and he, likes to fight everyone. And you'll think this guy's a major jerk, but he is definitely bright. He does have something to say, and I do agree with a bunch of what he says. And I don't agree with because it's him. I agree with that is just scientific, like it's truth type thing. So
the way I'm approaching
if you haven't read them since then, I would like generally, even for your wrapping your head around how you approach trades, risk management, psychology, all that kind of stuff, I would say actually do read it. To a degree, I've read his books 10 to 15 times, each of them, every year for the past 6, 7, 8 years. So if that's not a recommendation, then I don't know.
Fooled by Randomness. You talked about this, and I will look at that right now, and I will see. What about that anti-fragile? Because I have that on my list as well.
Yeah, anti-fragile is good as well. Part of the what do you call it? There's 4 books. One of them's full of aphorisms, which is not like a full book. But there's Black Swan, Fooled by Randomness. Better Procrustes is the aphorisms one. That is still a very good book as well. But it's more like short word type stuff. It's not necessarily a book. It's more like poetry. It's aphorisms.
It says it's going to be here in the end of January.
Black
I can't
Swan,
wait.
Fooled by Randomness. God, what's the fourth one?
The fourth one, I believe, is I can't remember. The Bed of something.
Yeah, Better Procrustes. I already said that. Is Anti-Fragile the fourth one? I swear there was another one.
Like the pocketbook, it's so much cheaper, but then it's gonna be tiny.
No. Yeah, get it. Okay, so if it's Fooled by Randomness or Black Swan, get the full ones. The others, or whatever. Anti-Fragile, I've read as well. That one's like sort of complementary to the other two, even though he kind of wrote them in like a weird order. And if you can find the Black Swan, there's like a second reviewed updated version they did in I think 2018 or 19 or something like that. Get that. It's got a few extra end chapters that are good.
All right.
Yeah.
But
those are kind of like, I at one point went to start writing a book and kind of read them. and then back to back, and I was like, oh, I can't write a book now. Like,
Okay, I just
if I
ordered
was
it.
going
It's
to
gonna
write a
be
book,
here.
these are the books I would write. So
Nice.
yeah.
Well, I've just ordered that one. It's gonna be here end of next month.
Do you tend to read books or audio?
I read.
Okay, fine. Interesting.
Lately, I've just mostly been reading. Well, I do both audio and reading. Why did I buy this book? Why could you just have gotten the audio? That's what I do with everything else. But now I bought this book. Well, I guess I have
But
good reading now.
you just said you read books. You don't do the audio.
I do read, but when I read, I try I usually read like 1 or 2 hours when I go to bed, and I try that type of reading. I try to be more. I read more about like stoicism and things like that, and not heavy,
Yeah.
heavy like things that I would use in my work. Because for the last,
That's one thing I would say with this book. It is not written heavy. It's written as an essay, something that you
nice,
enjoy reading. That is very light. It's kind of playful.
I
He
like that.
says a bunch of stuff the whole time. That's he specifically actually has like a monologue at the beginning saying like this is meant to be enjoyed. And so like I was
Nice.
saying, I read this book, 10, 15, 20 times a year for the past 8 years, all of his books. I actually enjoy them.
Like,
I often go to the gym, listen to that whilst I'm training, and smash it out. I got it on 2x speed. There you go.
it's the same with me. I have one book that I do that for as well. Actually, two books. It's Trading in the Zone with Mark Douglas. I've listened to that book so many times now on audiobook that I could probably recite it. I could probably tell my chapter. Don't do that because I can't. But
I can do the same with his. Yeah, I did 100%. I can hear it playing in my head. Yeah.
Got the practical stoic as well. Wonderful book. So those are my like go to book that I do read multiple times
You
a
know
year.
Ryan Holiday at all?
Yeah. But the thing
Yeah.
with Ryan Holiday is like I like his work. I've read the obstacle is the way, and that's a great book. I've read actually I've listened to probably all of his books. But the thing with Stoicism is that there's only the Stoics, and there's no modern Stoic philosopher, I believe, coming up with new ideas. There's only the originals. So when you look at Ryan Holiday or other
I think that's one of the reasons, though, that it is what it is. That it's kind of it's just right. It's like, yeah,
yeah, but
like that's
I
it.
mean, if you
It's one of those things like, do you try and don't fix something that isn't broken? Like, how would you add to it? Even if you had like a semblance of a maybe of how you might add to it, I personally, I would say, I don't know how I'd add to it. Right? Even as a like hypothetical, theoretical, we'll toss that idea around. I don't
that's
know
the point.
what would you add.
Yeah, that's my point. So why read Ryan Holiday? Why not read, the old Stoics? Why not read from them directly? Because basically, what Ryan Holiday does is he is repeating the things that the old Stoics has already said. So what I prefer doing is reading the original works from the original Stoics, like for example Marcus Aurelius' Meditations and
Yeah.
Epictetus and Socrates, and like going back to the old Stoics that has laid the foundation for the school of Stoicism. And what he does in the book, The Practice in Stoic, is he basically created a handbook and has different chapters on different things in life, and then he takes from the original content and then he puts it in the chapter. Because if you read Meditations by Marcus Aurelius, for example, it's very scattered, it's all over the place, it's a difficult read, but
Yeah,
this guy
but
takes
it's one of the best reads of the lot. It
oh
feels
yeah
almost modern, and so that's what I was going to say with Ryan Holiday is it makes it translates it into today perspective, I guess, or today's language per se.
Yeah.
I guess. So,
he does
I
have good, but for me, I found that the practicing Stoics, practicing Stoic, that book is basically everything that I've ever read about Stoicism, all the things I like about Stoicism from Ryan Holiday and others, in one book. So
Mm.
for me, I kind of found that that's the
fair.
book that
That's fair.
it gives me everything I need to from Stoic. What's up, Richard?
Dude, what is that? What a head.
Nice.
What
I
a
like
head.
that.
That's crazy.
Yeah, so to wrap up this discussion, to wrap up this whole discussion about the more esoteric things that we've talked about, I have this idea, and I have this more of a top-down analysis. Who brought that comment up, by the way?
I did, because I was going to
Okay.
say, like, dude, we've moved 3.8 pips in the past hours.
Yeah, it's not a lot
So
of work.
there's not a lot to talk about,
moving.
right? Like,
Yeah.
okay, do you guys capture that 3 pip move on euro dollar for the past 2.5, 3 hours?
I'm gonna have to jump off here. I'm gonna have to jump off here. Got my lunch, my chicken getting ready. But I want to wrap up this discussion and say that from this cycle analysis perspective, and I'm taking a top-down analysis here, where I'm the first answer that, or the first concept that I want to reject, is basically that there's a underlying hidden pattern in the universe based on William D. Gann's teaching and the book from Tony Plummer. I want to reject that, because what I can do then is I can go in and I can look at, okay, so there's no hidden meaning in the universe, but is there a way to see pattern in crowd psychology and in crowds? And like you said, LJ, like from the fourth turn, there's a reason why a pattern in the fourth turning appears. There's a reason behind that, and I want to see what's that reason. Can it be applicable to the markets, which we know it can already do? So then I have the behavioral finance framework to work with, and then from there
Yeah,
we can.
and I mean that's a large part of what I use when I talk to you as well, right? In terms of when I do my macro stuff and actually take a position on forecasted elements versus what I'm seeing from the actual market. And that's that part of that behavioral psychology, behavioral finance stuff, is because as well, a bunch of these players that make the forecasts, etc., that work at banks or hedge funds, they have a job, they have KPIs, they have to make a prediction, right? And they don't, get points for making, the thing to say for the S&P, your prediction for next year would be somewhere between minus 15% and plus 35%. That'll be an accurate prediction. If you do that, you're fired. You got to say like 21.3 or 8.7.
Yeah, you're gonna give them a price range. You're gonna say like, you have to give a price range.
So hence when these forecasts and stuff come out, yes, they do work, they do certain things, but they're trying to compete with other firms, all this kind of garbage, blah, blah, blah. So you can then gauge that against the sentiment on things like Bloomberg, that kind of stuff, the general temperament, the fear, greed index, that kind of thing, and then take your tilt. Yeah. Just like I've talked about inflation all year, and we had the tariffs, I'm like, there's not going to be inflation. There's no signals of inflation actually coming through. But you hear that through media and all this other kind of stuff. There's no indicator at all. And then we haven't seen it.
Fear-mongering?
Even to the degree that their Fed has kind of been behind with that as well. And you've also seen that 42 macro was more aligned with that as well. And so hence when you were showing me that, I was like, yeah, I agree with these guys, because that's what I'm saying.
Yeah, right? Exactly. And then I read 42 macro and I'm like, wait a minute. So inflation, there's no sign of higher inflation? Everyone's talking like it's on Bloomberg. Like every single host, every single guest on Bloomberg says like, yeah, inflation's going to go up. And then rhetoric. And then it didn't. And I'm like, we don't think inflation is going to go up anymore. And we think the Fed should cut. It's like, yeah, they should have cut 3 months ago, 4 months ago. Like they should have been way lower than what we are right now. Do you work with
Sorry,
Wallace already?
I just saw this comment and dude, Cam, that's funny.
All right, guys, I gotta leave you guys. I think we're gonna have Will coming on here soon as well, and then we're gonna have Richard Wells with a. I have to warn you, his voice is beyond. Yeah, it's something else. Richard Wells.
No, dude, he's going to be talking to us about supercars, the new Ferrari. He's been at the track lately. We got a full car section coming on.
His new Bugatti that
sponsored
he
by
just bought.
Top Gear.
Are we talking about
Amazon.
Will or Richard? Richard Wells or Will?
Richard Wells.
Richard Wells. Yeah, we
Yeah.
got
More
a
of a
Top
bike guy.
Gear sponsor now. Right? You know, FX trading, you got watches, you got, you know, supercars, that kind of stuff.
If I'm gonna be honest, I think after this discussion, people
Dude,
probably.
were you not informed on this?
No, I have no idea what you're talking about, but I don't care because I'm going to be leaving and having lunch. So I will see you all later. All right? Take care.
Bye,
Bye.
Jonathan.
See you, Johnson. See you, bro.
What's up, LJ?
How you doing, man?
Not too shabby, mate. I was watching
Dude, he
earlier.
had
and I
no
saw your
idea.
McDonald's hat. And I was like, I need one too.
Yeah, well, I came on before. I said to Jonathan, I was like, I'm pretty sure I've got like a Santa reindeer hat, like, and I couldn't find it. And then I realized I still had this from McDonald's from the other day. So I was like, all right, I'll be the Grinch. Yeah.
Nice.
So there we go. Dude, I like yours though. My question is, where's the rest of the elf? You ate him.
Yeah. The funny thing is, you buy them like this.
Yeah.
It's funny, mate.
That's good though. That's good.
Yeah. It's kind of groovy.
Hey.
Well, hello there.
Hello, Will. Where's your Santa hat? You can't join if
Yeah.
you don't have a Santa hat, mate.
Hang on,
Didn't
my
get
bad.
the memo, did you?
Bye, guys.
Yeah, just like that.
I will go out and get one. I need to go to the shop anyway. I'm looking at Part X in my computer for a more powerful computer because I've realized that my
You
laptop
say
isn't.
tech
Huh?
for your computer.
Yeah, I'm looking at upgrading my Part X in.
What? Partexin.
Part exchanging.
Oh.
Well,
I
what
thought you
else am I
said
going
like
to
a
do with my
Patek.
second laptop? I may
I
just
thought you
give it
said
to them.
a Patek, like the watch,
Yeah.
like a Patek.
Part
Oh,
Tection.
Patek. Oh, no.
What?
Yeah.
Why?
I heard part-tection. I was like,
I'm
What-
just going
what
to
is
go
part
get a
What are
Patek
you talking
just for
about?
my computer. I'm that wealthy, guys. You know, my
Holy hell.
computer gets a watch.
I'm so wealthy, guys. I'm gonna make up a word.
Yeah. But yeah, welcome, Will. We got Jeremy Clarkson here as well today.
No,
so-
dear. Terrible. It's the hat gang. How we doing? Hey, if I'd have known in advance, I would have brought a hat on stream as well.
Hang on, there you go. We got a hat.
I will say, Rich, you're not quite as bad today as you were. You slightly come around the other corner, right?
Yeah,
Say,
we're on.
dude,
we're on
you
the
sound
mend.
husky. You sound a bit hoarse.
Yeah, we're on the mend. Come down with flu late part of last week, and
Ooh,
just been pushing through with it. And there was that decision: do you trade? Do you trade whilst just feeling a little bit under the weather? Rich is saying no. I like the idea that if you've got a very simple process, you can still make good decisions. If you're a discretionary trader, if there's a lot of grey area in your edge and you've got a head full of fog, I think it becomes a little bit more difficult to make high quality decisions. But if you're a trader that's just like, yeah, I just enter here on this candle close or whatever, yeah, dude, it's been just carried on as normal. You know, just a little bit.
If I'm sick, I don't make like good decisions. Like I don't even like, oh, I don't want to eat. I don't feel well. And then the wife's like, you have to eat. That's a terrible decision not to eat. If I come to the market and try and make like financial decisions while I'm sick, nope. Nope.
But I'd be in hospital, out of surgery, and be like, Oh shoot, my battery's out. Plug me back in. Come on, someone get me a laptop. Let's go.
I need to manage this trade quickly.
Yeah,
I need to full lot size this one.
full margin. Full margin.
I found that a lot of my bad decisions actually comes when I'm feeling really good. When I'm feeling like overly confident, when things have been going well, I'll just spontaneously size up, and that's when I
Complacency,
find
yeah.
myself in a. I think one of the biggest mistakes, especially last year, was subconsciously trading. Like you get to a point where you've got enough experience that you just go, yeah, I know what I'm looking for, and then you just kind of fire these orders into the market. But before you know it, you'll be like $100 in drawdown, and then suddenly have this conscious thought of, hang on a minute. I need to actually really pay attention now because I'm just kind of wandered into the deep side of this puddle and I probably shouldn't even be here. Definitely been guilty of that. So reducing trading into a nice rules-based system and then just executing on that, and it's either a nice win or a nice loss. Anything outside of that, I do my best or my absolute best to avoid. I see that we've got a comment that says, let's see how this conversation goes now. Was the conversation a little bit awry before this? Was there sort of a pivoting point, or bring me up to speed?
No. So we were Jonathan and I were talking about I don't know how we got onto it, but Jonathan started expanding on various things, and we got into this like esoteric thing about knowledge, your application to the market when you make decisions. Is it randomness? Is it programmatic versus certain things? He was talking about, I was bringing up causation, correlation. There's certain patterns that recur. He was bringing up other stuff from other people that are saying, oh, there's this pattern all the time. I'm like, yes, but if you take law of large numbers, you delete this, prior set, then yes, almost like the Da Vinci Code, you get this printout that looks like magical or mythical or something. I was saying, no, if you take the possible number of combinations and permutations, yes, it looks magical, but it's really not. And then the question is, how close can you get from all possible information that you can possibly perceive, derive, calculate, versus all possible information out there together? Now, obviously, if you get all information, say, for instance, this was the end point of the conversation, every particle position of the universe, technically, you could predict time forward to some certain degree, or equally the position of every electrical impulse, synapse, everything in someone's brain, and forward project their next action, right?
Okay.
Provided you have the current positioning of the prior conditions, etc. So we're having this chat about markets, and are they sort of cyclical? Do they repeat these types of things? I was trying to explain that, well, you have a certain set of parameters you can buy and sell, and then with the buyers and sellers, they make certain levels of profit. There's certain degrees of commission, spread, etc. But given the certain parameters, there's only X number of possible outcomes, and then you do have outside positions coming in with taxation, governments, whatever else. But hence you can see there is a certain set of parameters that are fairly consistent. So hence, obviously, you are going to see a fairly consistent number of repetitions of, just like we have in markets, it's things don't repeat, but they rhyme. And that's why. So, and
I feel like if that was the first conversation I ever heard when I first got into trading, I probably would have just walked away and said, I'm not smart enough for this. I like the videos that are like, I'm going to show you a simple strategy on how you can make 20 pips a day. Like, they're the kind of stuff that I resonate with, right?
Yeah, I know. I was the rain on your parade, like saying to Jonathan, he was coming with some like cool stuff, and hence I was like, are we talking about this or whatever? And I was just like, but I had to say, like, my math physics brain was hurting, and I had to at least,
some pent up frustration in the.
No, really, like it's just jarring because again, it's one of those things. Like if you're not trying to, you're not going to know, right? Almost like if we were now talking about law, and like the Supreme Court in the US, every one of us here would have no idea, right? And so it'd just be speculation on, nonsense, right? So it's that similar thing. It's just one of those things to broaden your perspective
Yeah.
of how things work, right? And so that's why one of the reasons we talk about the macro fundamental options, mathematics, a bit of statistics in small amounts, not too heavy for you guys, but hopefully that over time you start to aggregate and build that broader perspective or understanding as to why it's important and how it can actually, move things forward and why the markets actually function the way they do. Right. So that's kind of the idea.
This is super interesting because it raises like now this is a generalized idea, right? Now I've heard this spoken about in a lot of I used to follow a lot of threads on forexfactory.com. Like when I was getting into trading, I used to read a lot of these threads, and there was this reoccurring theme that I've came across 5 or 6 times in my trading career, and that's the idea that the more intelligent you are, right? You know where I'm going with this. The higher IQ you have as a trader, the more difficulty you can find in accepting probability-based outcomes. Now, hold on, don't bite my head off with this because I know there's going to be some strong opinions about this. And chat, you've got to hear me out with this. But I remember reading this article, and it was about this guy that was getting into trading, and he was a bodybuilder, and he was very, very disciplined. Like he was able to just get up every day, chew through his macros, eat the right stuff, exercise the right stuff, sleep at the right times. And he was able to achieve almost like elite level consistency and discipline within his physical appearance, right? And I remember reading this article, and he was like, I'm going to show you all that I'm going to come back and I'm going to do and I implement exactly what I've achieved in my life. I'm going to do this in trading. And I remember as I kept reading this blog and this thread, and hats off to him, the guy came back and he said, you know what? He said, this is just so much more difficult than I ever quite imagined. And I just want to kind of take a moment to acknowledge that. And I remember reading that at the time, and I was quite early in my trading journey. And since then, there has been several, I guess, moments where I've seen people say, my IQ is well above the average. I will be able to figure this out. And even myself coming into trading, I had this idea that, you know what, I'll get this knocked out. I'll figure this thing out. This ain't going to be that difficult. And there has been this reoccurring theme that I've witnessed and also experienced in my own trading. The simpler we keep trading, the easier it is to be consistent. The more consistent we are, the more we get feedback on whether our data is actually working or whether it's not, and whether we need to pivot. But if we're these super creative, super intelligent, intellectual people, we find these rabbit holes to just dive down that sometimes they're not so helpful as a trader. That's just my own personal experience. And I have witnessed a little bit more of that observing other traders. And the traders that just keep it super simple, they're the traders that I've seen gain just a little bit more traction. So don't shoot the messenger. It's just something I've observed, and it's just something I feel a little bit close to my heart. But I'd love to hear your guys' perspective on it.
Yeah, well, I think if you're going to go that route, you need to be kind of the top end. You can't kind of be really smart. You have to be exceptionally intelligent and go like prime type, like quant level.
I agree with that. I think that when you're an intelligent person, you overthink it a lot because you want it to be complicated. Whereas myself, like I'm not the most intelligent cookie in the jar. I'll be dead honest with you guys. I'm like probably average smart, But I came to trading thinking I'm going to struggle with this. I'm not good at maths. I'm not good at numbers. I'm not good at any of this sort of data analysis, collecting, all these fundamental things. And I'm not good at looking at squiggles on a line and guessing where they're going next. Dude, look at me now. I'm a full-time trader. Like, you asked my brother to do this, and there's a whole reason why we do Funded Freedom. There's a whole reason why me and my brother do it together. He is not a trader, and he actually struggles with trading because he overcomplicates it. He looks at trading as if it should be some super technical, analytical, scientifical thing. You know, it's like a scientific thing. Rest my case. You know, whereas I think if you are not simple enough, if you're at a stage where you're accepting that, look, you're not the smartest cookie, you know, you're not the smartest, the sharpest tool in the shed, but you're going to look at it and try your hardest anyway. And when someone says keep it simple, you're going to say, yeah, simplicity sounds good to me. I'm afraid of the idea of complexity. You know, I think the more complex trading is, the people who don't like the idea of simplicity in trading may get a little bit scared and put off it. Whereas I think when you tell someone who loves the idea of simplicity that trading is simple if you keep it simple, and they follow a regimental, simplistic technique and they stay disciplined, I can't see why they can't succeed. And if anything, I see them succeeding more than most intellectual people who look at trading. Oh, keep it simple, keep it really basic, you know, straightforward, discipline. They're like, no, this must be complex. This is an art. This is something. They overcomplicate it because they know that they're intelligent. They want to make themselves feel more intelligent by making it sound more complex, which makes them feel more superior. It's more of it's more of a psychological thing most of the time with more intellectual people, I find, and that's based on studies in psychology as well. Whereas what I think LJ was touching on is the hyper intelligent, the people who really like go almost into the back end coding system of trading.
Well,
like,
Will, I'll say this: it's like business, right? Like it's like everyone's heard the A students work for B or C students, right? In business in general, right? But then you don't want to be, you want to be like the A plus plus, because
the people that designed the papers,
tech company, you know, like OpenAI, Google, whatever, like the hype of the hype of the hype. And then there's the really, really, really smart people, but they're just too wrapped up in certain things that they can't sort of maneuver. It's like they get wrapped up in their own web as a spider.
literally, they get
and instead of using that as a positional thing to move around the board, they get stuck, right? And then people beyond that don't quite have that purview at the same time. It's like ignorance is bliss thing, and they don't know the detrimental or the potential risk, and they just push forward. And obviously, it's going to be a statistics type thing. Some get killed, they do, but there's a certain number that push through, and also over time, if you push through enough, you do start to pick up certain learnings and understanding where the trapdoors are, and you can keep going forward, and then eventually you do get there. And as long as you have that perseverance, resilience, tenacity type aspect,
I think most of the time you find these people people with sort of issues. Like you more find it like common traits in like autistic people. I think like these sorts of people. So like the hyper intelligent normal people are usually, like you said, they get tangled in their own web. They struggle with things. They struggle with the complexifying. I think that's the word I'm looking for. They overcomplex the idea of trading, or they overcomplex the idea of anything in business success. And that's where the saying, the A plus students work for the C plus students, because us C plus students, us CB people, you know, we look for the easiest route. But those of us who work hard and understand that there's going to be discipline, hard work, blood, sweat, and tears that go into it, the ones that understand the true hard work comes from equating simplicity with hard work, I think become the masters. And then you get the people who get caught up in their own web, end up working for the people who try to find the most simplest route. But then, like you said, you get the people usually, more times than not, on the spectrum, because they're so hyper focused and super intelligent that they're in like the top 0.3% who end up in a different stratosphere. You know, they're not owning businesses. They're doing some incredible sort of
often there's something else, because you know, most like typical people, even if you're exceptionally intelligent, right? If you're typically regulated, we'll put that saying, right, as like a normal person, you'll have like family, kids or something, and you'll kind of you've done enough that, you know, what more is going to increase anything, and you're going to have you're obviously right enough to figure that There's no further expansion. You don't need some ridiculous yacht or whatever. So you reside back to, okay, I've got my family, my kids, my extension of friends and whatever, and that's fine, right?
Yeah, you fit
So
into what you know.
the extremes often do have excessive other differences going on for whatever reason. But then, yeah, within that, if you don't have that stuff, you get to a certain height because you have that ignorance is bliss type thing. But you still, at the same time, I will say, you have to learn along the way, obviously. Because eventually, if you just push that and push that and push that, you're playing a risk game. And eventually you hit Minesweeper and you blow up. And then you're out.
Yeah, 100%.
So you do still have to grow. But as well, it's one of those things as far as if we're determining that stuff of the like traditional learning path and calculating your value of that versus, because a lot of people I know that are very, very bright, but they hate school. They just hate it. But
Yeah, well, it's the same as myself, Like I never counted myself as a bright person. So many people now will be like, "Oh my God, Will is so intelligent. Like, have you spoken to Will? He's a really intelligent guy." I still don't believe that now. Like I hear a lot of people saying it. Like my mum says it all the time. I'm joking. I'm kidding, guys. But no, like I speak to people all the time. They're like, "Damn, Will, I didn't realize you were this intelligent." I was like, "Yeah, I didn't realize I was this intelligent either." It turns out I just really hated school. Like, a lot of people knew me from school. Like, I unfortunately went to a funeral last year, and that was technically like a school reunion because we went to school with this person, and I spoke to people I haven't seen in years, man, and they're like, "Damn, Will, like, what are you doing with yourself at the moment? Like, what did you go to like extra school, or like do you go like what happened?" Because they knew me as like one of these kids that just pisses about and just isn't a good kid in school. And I was like, "Nah, guys, I just hated school. I just found what I was passionate about, and turns out I have got a brain." So like you said, some people are really intelligent people, and again, people in the military, these people in the military would have belonged in prison. You'd thought, like, growing up, you'd be like, you deserve to be in prison. And then like next minute they join the military and you're like, hang on a minute, what happened to the guy that I knew in school? What happened to the guy that I thought deserved to spend life behind bars? Well, how is he now some absolute weapon as far as knowledge, not only physically as well? Like, their mental is just incredible. Like their mental game, what they can do to like in their daily life and what they can put up with and what they've dealt with is incredible. What they know about strategy and about what they're passionate in their industry. Like, we are all intelligent in our own ways, just about finding passion. I mean,
definitely. I also, okay. So I assume Jeremy Clarkson here has some kind of topic for us.
Also,
First of all, though,
go on.
Can I, if you had a pick for number one vehicle of this year, Clarkson, what might that be? So that's the first one. Second one, favorite F1 team, and then third one, favorite F1 driver.
Okay.
When you've ended your sentence, please end it with "in the world."
Yeah.
I feel like this would have worked better maybe 2 days ago.
No, come on. Yeah, no, you can do it a bit deeper. I know you've still got it in you. You were perfect the other day. It was full.
So,
what I'm really not okay with is how actually genuinely different he sounds. Like, I was like, "Oh, Rich is here, yay!" And then like someone started talking. I was like, "Who the hell is that talking?" It doesn't sound like
you guys didn't hear it the other day. He was full Clarkson, dude.
I was like, it doesn't sound like LJ because he's Aussie. Doesn't sound like a South African accent. Doesn't sound anything like Rich. I was like, "Who the hell is talking right now?" And then I saw Rich's mouth move, and I was like, "Oh, Rich is ill." I was like, "Wow, you sound so different."
Well, this is the downside is I don't watch Formula One. I don't know the Formula One teams or the drivers.
At least watch Formula One. God, Rich, you're the worst like prior mechanic that has no interest in cars. Like, what is this?
So can you imagine if someone works in a chocolate factory and after years and years you go, "What's your favorite chocolate bar?" And a part of them inside just dies. They're like, "Don't."
At least you're like, I like picnic or something, right? I mean, fair enough, right? Yeah, come on.
Okay, but
Right.
please say Mercedes Benz.
Followed by
Okay, well, okay, at least,
Covenant White
okay, you got,
One.
look, you can
Guys,
at least
guess what?
pick a supercar for this year
I don't think, yeah, or at least
To
pick a
be
team.
fair, I've
under
been
any
following-
conditions. It doesn't have to be. It was made this year.
Mhm.
It could be a retro car that had a resurgence, or something that is undervalued or underappreciated. And I know you also like bikes, so you can also mention bike.
Well, to
Yeah.
be fair, I've been following a story that's been unfolding online for a little while now, several months. And I spoke to Will about this, and it was to do with Bugatti. And a bit of a hypercar, bit of something a bit out there, something I don't know too much about. But there's an interesting story. There's a bit of an overlap with this car and somebody in the trading environment.
Creator,
trading space.
Alex FG.
Yeah.
Yeah. Who have you seen the videos?
Yeah, yeah, of course, yeah.
It's
Yeah.
but it's got an interesting kind of history if we follow it back and we look at kind of like how it's evolved, and learned a lot of stuff as I've been watching and following along towards like the heritage of these cars and stuff like that. No, I do not drive one myself, but I'm conscious. In less than 3 minutes, we've got a big interest rate decision coming up. We're forecast to drop interest rates on the pound, I believe, from 4 to 3.75. Don't quote me on that.
Yeah.
Okay, brilliant. So I'm not too far. And then I think we've also got euro interest rates following a couple of hours
do.
after that. So today is going
Yeah.
to be a big one. So for anyone trading on the high stakes accounts, remember you've got that rule where you want to be not placing new orders in the market. I think it's a couple of minutes before and a couple of minutes after that news event as well. So just be conscious that if you do the losses, you're going to have to take them, and there's a lot of slippage that comes around when it comes to trying to get filled close to these prices as well. So just something to be mindful of. Have you guys got any kind of views on the pound pairs at the moment? What are we expecting, especially on GBP USD? Are we thinking that this is going to be a rally or this is going to be a sell-off?
I think net it should end up in a rally, to be honest. I think the pound situation is kind of awkward after the budget with the central bank. But I mean, everything's been pretty well telegraphed. So I think it's going to be more of the buy the rumor, sell the fact type situation, even with the budget and everything. I think people expected things to be much, much worse. It hasn't been too bad.
So are you thinking this is strength for the pound, being the interest rates dropping?
For the time being. So it's like there are still structural problems with the UK in general, obviously, but they're not going to necessarily deal with it now. And also potentially because of those such problems, it's probably more likely that you hold interest rates, right? And that's going to be held for a longer time and potentially even up rather than dropping them. Now,
Okay.
if over time they do start to go up, that's probably actually a net negative. And then it's going to depend around the jobs data, manufacturing, CPI, all the rest to accompany that to actually get a full direction for the pound. But in the near term, that should be the aspect. It's kind of like Bank of Japan. They will raise rates, but most likely they will not give any forward indication whatsoever of continuing to do so, right? So they'll just abstain from the conversation altogether, even though that is probably the direction, that's probably the intelligent direction the new Bank of Japan, sorry, the new Japanese, do they call it president or Japan?
Is that also like their version of the prime minister
Prime
or something?
Yeah, is it prime minister or is it president in Japan? Prime minister. It'd be prime minister, wouldn't it? Yeah. Anyway, so yeah, she's talked about her opinions around that. So Bank of Japan continuing to push that forward as far as further rate hikes would be against what she wants right now. So she wants to keep that lower rates plus pumping out fiscal stimulus at low rates, et cetera, et cetera. So it's this weird dance, the same thing that the UK has right now, where the budget, the parliament, the government type thing is highly politicized, highly public, and highly economical, as well as the actual central bank. Just or somewhat how the Fed became with Trump talking about the Fed. And I mean, the US is obviously a different situation because it's the US. But yeah. Okay, I'll get rid of this so you guys can see it. But yeah, there we go. Up. So we got the cut. That's a hawkish cut. There you go. In real time. There we are.
Is anyone in anything at the moment within the pound? Just curious. Probably we're not going to get much off chat at the moment. If we ask, is anyone in chat in the pound? I should pretty much imagine they are staring at the screens right now, looking.
I hyper focus on the screen right now.
I would, yeah. I'm sitting in Aussie dollar.
I hope no one's in a trade, by the way, guys. Like, let us know if you're actually in a trade on pound.
I'm holding.
Nice big rally up.
I'm short EG. I'm long. Where am I? GA at the moment.
EG doing? Oh wow!
GJ. Yeah, I got a few positions running them, and I'm long GU as well.
Rich, you must be smiling right now.
And what
You're
EJ?
short EG
So we're saying-
and you're long GU. That's
I'm just following the system. It's it's something I've actually been. We kind of talk about the idea that trading can be super simple, and I found that I kind of allowed myself to get into the weeds a bit in my trading. And I was like, what would it look like if I was to build a higher time frame edge, and what would it look like if I was just to allow that edge to play through 100% rules based
Right.
system? And at the moment, yeah, just kind of letting it cook and letting it do its thing. And it's too early right now to see kind of how the results go. But yeah, interested to see at least kind of what happens from here moving on.
But yeah, Euro pound back down to the 2 standard div, right into support just here. So still, it's in neutral territory overall. Still technically bullish, but that's the definitely the support comes through here. Prior highs. I like this for.
There we are.
So I think we had talked about this previously to hit this level. It got there sooner, I thought, and then come down. But then ultimately up here. So I think this is like a good base to actually build off. I think the pound will actually be a bit stronger than the euro coming into next year. There's nothing wrong with the euro. It's just the euro is very they're very neutral. No room to cut rates. No reason to increase rates. It's kind of just chilling, right?
a happy medium. Just happy to be where they are.
Yeah. Whereas the pound, the UK has a lot of flux between. We've had very negative sentiment overall, going back into a bit more positive. Then you've got the actual rate increases, whether that's technically positive or negative per the future, but you get the overall fundamental picture with that. And then that's pretty much the flux point where, no one has cared about the ECB for some time or any of the European data, quite frankly. It's been pretty benign, pretty chill. It's whatever. So right
I
now,
still
there's no
would
reason
pay
to change.
during the high impact news though.
That's fair. That's fair.
We still haven't heard Rich say "in the world."
Oh yeah, fair point. You try to avoid.
Yeah,
that.
and you didn't give your favorite superbike and supercar of the year.
Oh no, he gave us a Bugatti. I think that's what he said with the supercar.
No, he
Bugatti,
spoke about a very
with,
interesting
no,
article.
he was talking
that
about Alex FG, right? And because who was it? Mattia Rimac has started Rimac, the other hypercar company. They've now bought Bugatti pretty much fully out of Volkswagen, I believe.
Oh, no way.
Yeah, and then Alex FG has been saying like, oh yeah, I'll reprint because he crashed it, obviously.
Yeah, no, I know. Yeah.
And then he wants to reprint the 3D print all the parts. Because if he repaired it, it costs like $500,000 US or something. Without labor, I think with labor, close to $1 million. And he has to ship it over. So we go on for like a year or more. So
Didn't they try saying to him though that he had to get it done with him?
He's just using it to create content. He's not gonna let that thing go after buying it for that. Like he rebought the thing for content, and now we can say we're gonna 3D print it, and you can do that. And even if you 3D print it and it sucks, you got all the content. Then eventually you can send it over there, and arguably it's also good for for Bugatti, all that kind of stuff. Yeah,
Imagine saying
it's just a
and repaired a Bugatti.
We're going heavily off topic. We still haven't gotten Rich to say "in the world." Come on, everybody, shut up. Let him say it.
I was lagging ever so slightly.
I noticed that. I think that's why we were talking a little bit, just because we were waiting for you to finish lagging. But now that you finished lagging, start blagging.
It doesn't even sound anything like it, but if you want it, I'll give it a go. In the world. Doesn't sound anything like it.
A little bit of a pause. We just need
You need to say my favorite car in the world is the Bugatti.
Guys, I have no favorite car right now. You know, I have a favorite trading pair though, and that would be GBP USD. That's the pair.
Now tell us as Jeremy Clarkson that your favorite trading pair in the world is GBP.
Absolutely not. Look, one day I'll come in with my big hat on and I'll be able to join in properly. But this year I'm not fully equipped for it. All right, we'll have to build up to it in stages.
Dude, I've been trying to build you up in stages ever since the beginning of LTF.
Like years, like half decade, just waiting.
Rich,
I was
are you joining us on Friday?
Sorry,
are you joining us on Friday?
I want to say next Friday, but next Friday is it Boxing Day next Friday?
Yeah, I don't think we'll be doing next Friday. We'll be doing Friday after though.
Hang on, that's New Year's Day.
Oh, is it?
Or is it the second?
Let me have a look.
The second.
It's the second. Yeah, so we can do we can do the second.
I reckon the second. Pencil me in. That's
okay,
me.
so on the second, what we'll do is we'll give you an opportunity during our poker session for you to in the world.
For God's sake. Well, now he's not going to join.
I was going to say, guys, if I'm still under the weather in 2 weeks from now, then yeah, something seriously went wrong. But for the most part, what I enjoy about trading is how you can do this even if you are under the weather, providing you have a simple enough system. Like I was able to just have a look at my account, make a few decisions based on a simple system, and then close it. And it's like trading doesn't have to be any more strenuous than that. I'm finally kind of experiencing the side of trading where people go, do you want to make 20 pips a day with no stress, with no hassle? Do you want to trade your account and not even think about it? Like I hold positions overnight now, and I look at them in the next day and I go, cool. Like it's just following a system, and providing I follow it well, I then get to look at the results and say, is it working or is it not? There's a slight, I'm going to talk about this a little bit more in a Discord call that we have later on. There is a slight risk management issue that I'm still working through at the moment as I develop and build out this new system, something that I'm going to spend a little bit more time with. So right now I've just got risk super, super low, and just kind of allowing the results to just come in. And it's interesting because in the beginning, I have no bias. Whatever. I'm just going to execute on a system. Day 1 finishes well. Day 2 finishes well. Day 3 has a really good day. Day 4 is doing the same, and I'm like, try not to get excited about this because it's just my job is to act on a process and gain information and data. But the longer it goes, the more the easier it is to attach emotion to it because we see a track record and we go, well, this looks interesting. What if I sized up? So just kind of keeping that neutral. I made a promise to myself that I'm just going to keep the risks super, super, super low on this, and just allow the system to play through. And so far it's done. Like I say, so far early days, it's done well. Just going to let it cook. But where I want to be is what's going to happen in the new year. Back to scalping, back on the lower time frames with a little bit more of an opportunity to keep an eye on the charts and seeing these lower time frames play through. You want to talk to me about price action? 4-hour charts, okay, they get the job done, right? Like if we look at why we got into trading, after a while we end up finding that we're trying to find our like super niche with trading that, you know, something that fits us. But my question to you guys, would you throw that all away if you could have a super simple system that just produced a couple of % return a month? Would that be enough for you to say, do you know what, I'm going to forget the lower time frames. I'm going to forget these quirky edges. I'm going to forget these high nuance gray area trading strategies. If you could have a super simple rules-based higher time frame system that you check the charts 5 minutes a day and it produced around about 2% a month as an average over a year, would you throw out your current system to
Well, that
take
is
that
my current system.
4-hour charts?
Starting fair, okay, yeah.
Okay,
10
so
minutes-
how much are
10
we
minutes a
risking?
day?
Let's start with this.
Sorry?
How much are we risking per trade? Let's start with that.
Risking around about 0.25%. So you're looking about an 8-hour monthly gain.
Okay. How often am I trading?
10 minutes a day.
Do I get daily trades or is it like 3 a week, that kind of like thing, 2 a week?
No, you get around about 10 entries a day, but you're just checking them on.
And a day.
Yeah.
10 entries a day at a 0.25% risk, but you
In
make
10
on
minutes.
average 2
In
hour a
10
month.
minutes, that's one trade a minute.
It's not. It's how's that one trade a minute? So we got every 4 hours we have, but you're talking collectively over a day. You probably have close to about 5 entries a day as a collective, and
Okay,
then
so
you're
I just
your
want to get the numbers.
total exposure is 0.25%. Your total exposure, not
Oh,
per
total, okay,
trade.
right. And then you're still making 8 hour a month on average.
Yeah. Yeah.
At a 0.25% risk? Sure.
But would
I would.
tick the box of why you got into trading? Like imagine you're almost at a point where it's so boring, it's so inactive, you almost have nothing to do. Like you're not watching the charts now. It's just a quick check every like a couple of times a day. Like you're almost not feeling like you're trading anymore, but you're getting the results that you always wanted from trading. Would you swap it? Like what I'm trying to work out is, are we trading for the sake of getting the feedback, the excitement, the dopamine hits, feeling like we're a trader, managing risk? Or would you just say, do you know what, I got into this to receive X amount of results and I can get that, but I lose that connection of scalping on the lower timeframes or looking and making these kind of nuance and experience-based decisions?
You
Okay,
know
I'll-
what? If I wanted excitement, I can go and chase a lion to get excitement. I can walk out my door and I can go into a field and get chased by a rabid animal if I wanted excitement. You're
Okay.
telling me that I can get 8R consistently, low risk, 0.25%, total exposure. I only have to look at the charts 10 to 30 minutes a day, and the rest of the time I can go about my business. I'm taking that any day of the week.
Okay.
Over sitting here,
So
heart racing. Is this trade gonna? No. I'll go and find some excitement somewhere else. Now I
Sure.
have time. Why not?
So what's the thing per month? You're saying, Rich?
If you could get a couple of percent a month, but it costs you sitting there.
I mean, it might be different for me, like, but
Yeah.
you know,
I-
Rich, but
I wouldn't. I don't think I would.
Okay.
Now,
So we've got 1 for and 2 against. Okay.
the reason I wouldn't is because the only reason I trade as much as I do now is because I stream. other than that, I think I've got a better strategy than the one you're proposing.
Nice. Okay.
You know,
So we're trying to work out, like, what does trading mean to you? Is it just a means to an end to try and earn an income, or is it actually something that you find a lot of enjoyment and fulfillment through?
yeah.
And a lot of traders I speak to, they wouldn't want to give up the activity of trading. They enjoy the activity of trading, even though it's highly stressful, highly exciting.
Yeah, 100%.
They enjoy that emotional roller coaster of it. And I was saying, well, what if you could generate a mild result without, and the key is mild, because, LJ, you can have a wonderful month and 2% return. It isn't even close to what a wonderful month could look like. And when we talk about passing prop firm challenges, can you imagine that it might take 6 months to pass a challenge? So it now puts this new timeline of, a lot of traders I speak to are, Rich, I'm not funded. It's been 3 weeks. What's going wrong with my strategy? And I'm like, so you expect to be funded within 3 weeks? I mean, LJ, you don't help the statistic when I remember you
No,
passed.
I don't. Yeah,
today.
yeah.
I was like, dude, is this
I
normal?
think, it's one of those things, like, because some people want to just, like, you open a business. Some people want to open a cafe or a place that sells T-shirts and clothes and other stuff, or maybe even construction business. Other people want to open like a tech company that does this, and it's on the stock market and it's worth right? These are very different things, right? Versus you got a corner cafe and some AI unicorn type thing, right? And they're going to come with different expectations for you to actually try and do and achieve that, and different livelihoods, lifestyles, people, connections, all that kind of stuff. So I think it's a multi-faceted question with how you approach your trading. How much time do you want to spend on the charts? What do you want to get out of it? What's the purpose? Why are you doing it to begin with? Just like you said, do you actually enjoy it, or is this a means to the end, or something else, right? So again, I think it's one of those weird. Trading is one of those really weird things where it's very entrepreneurial, very business-like. It's also very broad in that you can go really, really hard to the top ends of town, or you can also ratchet it down to a very simple thing, but it's kind of the same thing the whole time. Whereas like something like a business, you got to actually, swap business, or even a career or something, you swap career entirely. This, you can say, I'm going to work this week or 1 or 2 hours this week or something, then nothing. And then the next week you can crunch out 80 hours if you want. And it's completely on you. You can ratchet that scale up. There's very few other places that are flexible, malleable, that you can actually ratchet that up or down and mold it to what you want. So I think that's also one of the things that attracts people in that freedom type sense, that you can aggregate it to what you're doing. And even if you're working a prior job, you can build that into how you're doing it, eventually migrate that over. And then often people spend a bunch of time on trading and then actually reduce the time on trading and then go back to spending time on other stuff. So it's this weird transition type thing.
I believe it was Mark Douglas said, we have unlimited creativity in the markets. We decide when the pain and the fun starts. We decide when it stops. We decide what we buy, what we sell, how much of it, and which assets we get involved with. We decide if we average down, if we add to winners, if we add to losers, if we move our stops, if we don't have stops. And there is this opportunity for us to be almost, as you say, infinitely, you know what I'm trying to say, creative within the markets and trade any kind of strategy. And I've typically found as a creative person, I will build these lists of strategies and concepts I think would be really fun to trade or really profitable. And they're not things you typically find taught on social media or the internet, but it's just an idea. You look at price, and we have hundreds and hundreds, if not thousands of indicators. We have tens, if not hundreds of thousands of settings that we could adjust and variables that we could use. We have hundreds of different assets that we can get involved with in the market. And when you put them all together, it equates to millions, if not tens of millions of potential opportunities to look at information and make decisions. And then you've got your bias that you attach to that. And it's almost infinite amount of opportunity, providing price moves, that you can build ideas and get involved in the market. And I love something you touched on earlier, that you guys were talking about this idea of like not making decisions based on all the information. And if your trade is to go into profit, somebody needs to look at that same trade and buy that up. And you might buy at 3. You've got to hope that they look at it at 4 and go, that's good, I'm going to take that to 5. And you've got to hope that enough buyers are kind of going to push that trade into profit. So a lot of stuff in my trading shifted when I looked at the idea that what if I looked at the market through the lens of other participants, and rather than I go, hey, what do I think it's going to do? What if I go, what do I think other people are going to do? And this is something that it really helped me build trading systems around the psychology of market participants. You know, we can all look at this chart and go, the chart's breaking down. This looks like a good sell. But rather than going, it's breaking down, it looks like a good sell, I look at it and go, well, what would other people be willing to do? Where would they be willing to add to this sell? Where would they be willing to add to this buy? Because I understood that the market had to have other participants to push my trades into profit. So I'm looking for those moments where I think, where are they going to inject these ideas or their beliefs into the market? And if we can get enough people to believe and push the same activity, there is a probability that my trade will go into profit. And it was
That, or the other side that people don't remember is enough people to not have confidence about a certain idea.
Same thing, right?
Again, when you get low liquidity, low volume, because everyone's sitting on their hands because they're not sure, but the market keeps moving up because there's certain people that go, no, I think this is good, I'm gonna push early, and then hence you get that they're forced to join later, and then that's a more sophisticated thing where, right, you get trying to front run certain things, but it's both ways, and having it both ways as well creates a hard dynamic because
it's what I love to reference as the perfect storm. It's on a good day, I never enter a trade until I get these two components. Number one is buyers look at this and go, this is an amazing buy. And number two, sellers go, oh, this is an awful sell. And I want that moment where the buyers go, let's start getting involved with this. And the sellers go, I need to get out of this. This has gone just terribly wrong. And what we're getting is that perfect storm. We're getting the tide and the wind pushing momentum. And this is where I find that I can catch those higher probability moves. But the key word there is probability. It's something that just puts the odds in your favor. Many times I've seen this perfect environment and my trade has just flopped. And it's at those times I'm really thankful that I use risk management and that I'm not too prideful to let go of a loss when I'm wrong. Because if I hang on to it, it's like a dog with a bone. You hang on to it and it's getting ripped out. You're gonna end up pulling your teeth out over it. And I remember yesterday on the stream, Sol, he mentioned that he had taken on a trade idea and held on to that for just a little bit too long, and it wipes out days of profits, sometimes weeks of profits. And he said, I never want to be in this position again, where I'm putting myself in a state where my bias is wrong or my trade idea is wrong, and I'm allowing it just to continually work against me. This is something that we hear, when we hear this phrase, cut losers short and let winners run. It comes back to the book Tom Hugard wrote, The Best Loser Wins, where he says, amateur traders, they are fearful when their trades go into profit. And when their trades go into loss, they are hopeful that they're going to turn back round. And if we look at that as a typical default of a human behavior, it's the reverse that we need to do. Okay, this trade is going against me. I need to be fearful. If I don't manage this and accept this loss, which we do prior to entering the trade, then actually the 2% I make in a month or whatever it might be, what is it relative to? Risking your whole account? Then you don't make 1R, 2R, 5R, 8R. If you're risking your whole account with no stop loss and no real risk management, and you don't know how to manage losses when they go against you, you have nothing as a benchmark to work out, was that 2% relative? We know many of us can smash out 10% return a month, maybe 100% if we just YOLO'd an account and went all in with it. But what's that 10% relative to? If you're risking your entire account and you just full port an account and you make 10%, all you're really making is 0.1 R of what you were willing to risk. And as a trader, that's, what was it you said earlier about the banks? If they make profit 364 days a year and one day they don't make profit,
Out of 365, that's a red flag. Yeah,
typically their losing days are gonna wipe out. This is why I both love and hate the martingale strategy, because I can win 99 days out of 100.
It's stupid.
And then,
That's stupid.
but if
Martingale's horrible, man.
Yeah.
I saw this hedging martingale technique, which a guy created a video about 3 years ago, and I remember looking at it and being like, this guy's really onto something. This is how you never. And what I realized is he was just basically putting buy stops and sell stops and increasing the volume and hoping that eventually the market broke out of a range. But every time it triggered a new order and pulled back into the range, his drawdown just got bigger and bigger and bigger.
Yeah.
And his strike rate, it would have been over 90%. But again, it comes down to when it hits and flops, you wipe out all the profits, which there's no sustainability in it, sadly, when it comes to, which it all comes back to, I became profitable when I learned to manage risk. And when I learned to be consistent around the idea that I have a trade idea and I need to let it go if it goes to this level. And everything inside was, but what if it just wicks you out and comes back? Just move your stop loss a little bit more. You've got this. And it was that discipline of like, no, at this level, I'm wrong. I'm totally wrong about my idea and I need to accept and stop the loss. And even that little phrase of, rather than a losing trade, it was, no, I'm going to choose to stop the loss at this level. That's one of the only things I learned to control and rely on in the market, was my ability to rely on cutting the risk and cutting the loss and making sure that I didn't allow one trade to wipe me out. Many of us have gone through it, allowing that trade to just absolutely ruin an account. It happens, sadly. But the key thing is that we stop it from happening as we move forward. Otherwise, we're stuck in this cycle of things feel good. 90 days of profits in a row, and then the 100th day comes and it's like everything was for nothing. So it's, we don't want to be in a cycle where we kid ourselves as a trader. And if we're not managing risk, it's something that we need to get on top of pretty sharp.
Definitely. I gotta jump off in a second. So typical with the euro buys. I don't know if you're talking about my chart prior.
Yeah, he was.
If you want, I can run through this quick, or else, if not, if you want more depth, jump into the Discord tomorrow with myself and Akram in Discord on the Friday, 1 a.m. GMT, 1 p.m. sorry, GMT, and I can get into more depth if you want. But if we're talking about the sort of buy through here, so this is my end of year expectation, and we're back positioned right the way down here. I thought we'd end up somewhere in this 117.30 to 117.60 odd area, and right now we're actually very nicely well positioned in that. The Aussie dollar, I expected we would get a bit higher up into here, so we haven't quite got there. Now that's been brought down by the NASDAQ. As you guys can see, they're very similar. As the NASDAQ's come down, the Aussie dollar's come down. Now, going back to the euro, like you're talking about. So this being the rough estimation period, this was based off the NFP, right? So people have been kind of, downplaying the NFP and how poor it would be. Not that it's going to be extensive, but this is kind of like what I was talking about with Jonatan earlier, that the overall market sentiment in the general media sphere, because it's kind of odd how much that still plays a heavy impact into people at institutions, banks, all the rest. Now, that's because of perception. We have jobs, job titles, KPIs, all that kind of stuff. So no one wants to look like the odd herring out of the bunch if they get it wrong. So people tend to cluster into the average perspective, because then even if you get it wrong, well, everyone also got it wrong, so I'm just, by the by, right? Now, it was also per the actual price action that we had. I don't think we'll get anywhere near towards 118, 119, etc. before Christmas. So this was what we were looking for, a blow off top. I think I was on stream with Rich at the time just before this, looking for that to then return lower and pretty much retrade sideways in this cluster. So it was more just a factor of we've had this big run up through here, pretty consistent, slight sideways consolidation, another run higher. We've got the major news, which the market was sort of building up for. Buy the rumor, sell the fact, come back down as support, and then end the year in this cluster. But yeah, like I said, to go into more depth, I mean, jump in the Discord and I can go through all the macro perspective, whatever. I feel like I'm going to take up the next half hour if I do that now. I also got to jump off. So I will leave you guys with Rich, and Will. And if you guys do want to jump in the Discord tomorrow, I'll see you there. But yeah, any guys that are not around next week, Merry Christmas. If not, we do have the 2026 live prep event on the Monday, right? Which I'll be presenting there as well. So you guys trying to get ready for 2026, join the prep event. You guys will find the link down here somewhere as well. Combination between the fivers and trade the pool. Bunch of good lineup across the board. We'll cover you guys right across the board, and I'll see you there. But yeah, come tomorrow in the Discord, do call, and I'll explain it more. There you go. So,
Awesome.
But yeah, I really do have to run. Sorry guys. So I'll see you tomorrow. Ciao.
Nice one. I'm okay, mate.
I'm going to have to follow suit as well. So just quickly, I want to touch on this before I fly up. A quick question comes in from Sam. It says, Rich, would you accept a trading strategy where you take one trade a year and it drops only a few percent points below the 4-hour strategy? It's relative question based on your personality. For myself, personally, no. The only reason is because I wouldn't have enough allocation to make just one trade a year worthwhile. The idea why I work down to the smaller time frames is because it gives me an opportunity to work capital much, much more often. If I'm trading just once a month or once a year, I would need a huge, huge pot to make any kind of financial return. So typically for me, it's all. If I'm working with smaller allocation, I want more activity to have an opportunity for that edge to play through. But I'm going to have to love you guys and leave you. Again, just to reiterate what LJ said, we've got this wonderful trading event coming up on the 22nd. Preps you, gets you completely ready for 2026. I'll be watching that with my notepad out, ready to take notes on it. A little bit later on today, in 3 hours from now, just over, within the Discord, we have a Q&A session. I'll be in there. We're going to have an open mic session, have a chance to talk through anything trading related. So if you've got any questions or anything you want to dive into a little bit more in detail, you can catch me in there. That'll be in just over 3 hours. So if you're not registered within the Discord, register as a Fivers trader. Within your hub, you'll see a link for the Discord. You join the Discord, and then you'll see under the events, and that will be starting at 3:45. And I will leave you in the wonderful, capable hands of Will and Rich, and I'll see you.
You do me a massive favor before you go.
Well, no.
Can you say, on that bombshell, good night?
On that bombshell, good night.
There we go.
Right, guys.
I love it.
Bye.
Awesome stuff. Nice one. Thanks, Rich. See you later, bro. Oh, man, you makes me laugh. I love Rich. What's good,
All right,
Santa?
I need to up your volume by me now because you're still a bit low for me, mate.
Still a bit quiet. a little bit quiet. I'm sure the missus would love for me to be a little bit quiet.
Oh, no, but I can
That sounded
barely...
that sounded innuendo. I didn't mean it like that.
There we go. I've got Santa on me head, mate.
Yeah. Got your head between Santa's thighs, at being. Oh, okay, I see. You're trying to get yourself on the good list.
Yeah, I'm very deep inside of Santa at the moment. Anyway,
Ach, very dirty machen.
Where can we watch this 2026 event? Mutsar is asking. So in the description box below, you will have a link. That link, if you go and register there, you should get all of the detail there. I believe it's going to be on this YouTube channel on Monday, is where they will be streaming from. So you can just come back here on Monday for that.
Indeed. Oh yeah, it's Monday. Wow, I keep forgetting. Dude, I'm losing track of time.
You're around the corner, mate.
Literally, like 1 minute, it feels like, I don't know, 3 weeks away is Christmas, even though so literally a week today. A week today is Christmas. It feels like ages away. But then if you think about it, it'll come around so quickly.
So you can literally go to the Fiverr's Funding and Beyond, the YouTube stream, where we are right now, to the YouTube channel, and you will see that they have the information right here. So it's an upcoming stream that's coming up for the year. So you can literally just go have a look there. So nice. So nice. Everything is all packed in one neat little area. So... but go and register in the link in the description box below. Go and register for that, because with that registration, there is going to be some very interesting information that's going to be given out to you. Like, I don't know the exact stuff, but it's going to be exclusive to those who have registered to it. And there's also prizes that's going to be handed out. So in order for you to potentially earn one of those prizes, up to $2 million worth of prizes that's being given away. So that's going to be all kinds of stuff that they're giving away. But you need to be registered in order to participate in that. So
get yourself registered, guys. Get yourself in. Sounds exciting, dude. I'm buzzing.
Can anyone explain the impulse move on pound? Yeah, we had news. So we had the official bank rate for pound that came out exactly as expected. They wanted to drop the interest rate, so by 25 base points, and that's exactly what they did. They dropped it by the base point amount, and pound picked up because it's been seen as a good decision. It's good for the pound. Price goes up. It's as simple as that.
Mm-hmm.
So yeah, this move here was news. And if you want to know where the news is or where the information is, you can go to forexfactory.com to find the news information. It's free. You don't need an account. You can literally just log in there. Well, you don't even have to log in. You literally just go to forexfactory.com and you will get all of the information. You just click on the calendar and it will give you all of the information for every single day of the week. You can have it by the week. You can have it by the day. The information is there for you free of charge.
Yes, indeed. I'm just sitting at break even in an EU sell at the moment.
Oh yeah, you are selling EU, right?
Yes. It looked really nice on the 5 minute. It looked a bit ugly on the 15 minute, but
it doesn't look horrible. The only thing that I'm worried about is that we are heading into the news as well for them. You know, main financing rate, which is going to be in what is the time? 45 minutes, mate.
Oh yeah, 45. I'll probably just take out, I don't know, close. Two things that'll cross my mind. You know, I'm not getting the move that I want, especially with the higher time frame. 15 minute looking a little less appetizing. So again.
Where did you get in?
Two areas, 117.15.6 and 117.17's flat.
17 flat. Okay, and then the other one was 17.15.6.
15.6, yeah. So
Okay, so one is in drawdowns, one is slightly in profit.
yeah, I'm about $1 down.
We've got 4 minutes or so before the 15-minute candle closes.
Yeah,
We have a small little area where we can potentially come and test, which is 117.12. But I mean, it doesn't look bad, mate.
No, it doesn't. The only thing that's worrying me is the fact that we got news in close to half hour.
We might potentially consolidate in this area in the next for the
Yeah.
next 45 minutes.
So if I don't get some form of momentumous move, I'll probably just pull out at break even or close to break even. We'll see how it goes. It depends. Like I said, depends on the momentum. I like to see not necessarily instant profit, but I like to see a little bit of something coming into the market. It'll depend on how this 15-minute closes as well. Because if we look at this on
Dude,
the
it
5,
looks like it's going to go down.
yeah, well, I'm $12 up at the moment, so I already banked
Chips and
$60 today.
1.6 pips. So 4.6 pips in total,
Gosh.
which isn't horrible.
Yeah, the 15 looks okay, but I don't know. It depends how this 15 closes. If this 15 closes with a wick, I'll probably just say, nah, I'm done. I'm good. I'm gravy, baby. I'm out. So fuck this, I'm out. Oh, we'll see. We'll see how it goes. Back into drawdown. We'll break even. A 0.1 of a cent. Any opportunities come to you today between our stream and this stream?
No, it was just that NAS buy that we had. But since then, obviously with the news on GU and EU, or the high impact news on GU and EU, I had zero intention of trading either one of the two.
Yeah, fair.
But since then, I've only, from yesterday, I only had the NASDAQ sell, and then this morning I had the NASDAQ buy. And then because we do have high impact dollar news, CPI, and unemployment rates this afternoon, I will most probably not be trading again today. It doesn't make sense on high impact news days to want to go and try and steal from the market,
Yeah.
So I'd just rather not.
Seen Martin and I saying, Richard, do you remember USD?
Yeah, it was this one.
Yeah.
This one of yours this morning.
Pure nothingness going on.
Well, I mean, it reached this tippy top percent that I remember talking to you about, Martin, saying that it needed to break above this area if we were going to have this result, this first one over here. But then I also said that if that doesn't happen, then this was most probably going to be the follow-up result, this one over here. So we're busy building into this bottom result where we will most probably come and test the bottom of Tokyo session, and then if that fails, then we'll probably start pushing lower to this area of interest down here. Because we did not get the break and close above this high point. We just kind of like wicked into it. So, and then also we have this area over here where we initially had consolidation on, breakout, retest, and attempt to push higher. So this is probably going to wait for the unemployment information this afternoon, and then we should see a little bit more movement. But overall, I wasn't all that super confident about breaking higher, just because of the sheer amount of higher time frame areas where we've had strong downward reactions off of, and the upward reaction wasn't all that particularly strong, in my opinion. So I still think this was going to be the most probable movement.
Yes. We're at those lows now. We just had a nice little bear push down
On which one?
on Euro. We had a nice close.
Yeah, we'll see if we reach the 1712 area.
I've taken out.
I mean, both of them should have been in profit if you took out.
Oh yeah, I took out for about $16.
Oh, dude, $16 is $16.
100% profit's profit. You know, we came down, tested this area, we wicked it. Like we literally came down, equaled these lows, wicked, closed above the body, came back down, and then we hit $20 and then shot straight back up. And I thought, nah, screw it, I'm out. You know, we're going to test these lows one more time. We may be able to wick the low, but I'm done. I'm done for the day now. Actually, $70 up on this 10K account, so that's nearly 1% up. That's 0.7%.
Kryptonite asking Richard, can you have a look at AUD USD? AUD USD does not look super great to me at the moment. It is super consolidating at this point in time.
I think we're just waiting for the big high impact at cutback. I think that's what we're waiting on right now.
So we're close to the high of day. We have naught but moved anywhere outside of this area, and this is a fair few hours, like from 10 o'clock in the morning up until just before 3 my time. So that's 5 hours that we have just been stuck in this range, and I don't think it's a particularly large range, to be honest with you. It's almost 9 pips. So very consolidative. We're waiting for news. We're waiting for something to drive the market. Let's try and see. So okay, this was a base, not a base, but like an area of interest. I can just extend it a little bit. Let's see. I'm going to go into the higher time frame to see on AUD whether or not... Okay, wait. First of all, let me just remove that, remove this, and remove that so I can have a clear view of what it is that I want to see on the market. We have this low swing over here that was broken on Wednesday, so that was yesterday. We have a base area over here. This is on the 4 hourly. So there is an area there that was... price continued to push higher from off. So this was a bullish trend pushed up from there. We have this area where price seemed to have been slightly consolidative. We've had 2 reactions off of it as well, and that is pretty much where we've broken through now. It is showing some bullish candles, but it's not strong bullish. It's still theoretically, it's still very weak bullish. We do have a base area over there where price wicked this morning, potentially wicking into again. This is weak downward action. I don't see particularly strong bearish. On the daily it looks a lot more, but on the daily it does look like it's just a typical pullback, don't you think?
It does look nice. It looks nice for that continuation.
I mean, it's a slow downward descent. It's not a sharp downward descent.
Yeah.
Okay.
I think it'll depend on what happens now at that swing high. If it fails to break above, then it'll continue that downwards descent. If we break and close above that previous swing high that you just marked out, then I think we could potentially start, moving to the higher.
On the 4 hourly, it was definitely more bearish. I mean, if that's the high, this is a low. You're making a lower high, lower low. So you are bearish on the 4 hourly. On the 1 hourly, it's a bit flat. It is a bit flat because you've made an equal high over here effectively. It's very close to. You have this high point over here and then that high point over there. Let's remove this one. Yeah, I think this might potentially continue lower, but I don't know how strongly it's going to continue going lower. I mean, we did have this area, these wicks over here that absolutely got destroyed. the lower wicks. Obviously, from the same point of view as well, that area they also got wicked and it's continuing lower. We do have a small little area of indecision over here. This is on the hourly, by the way, which was also a support point. I think there is potential for us to drift a little bit lower and potentially come and test here. But that is only because
move a little bit higher on that one.
yeah, we're not making higher highs, mate.
Yeah, fair. I suppose unless we can maybe like wick it, I move up, wick it, and then push down.
Yeah, unless this is a higher low.
Fair. Yeah. If that's the
If
case,
it is, then there is the potential for us to potentially, if this area here turns out to be a higher low.
Things I'd like to move up back into that breakout there of that low and that high consolidation. I'd like to move up into that if we're going to continue on down on the higher time frame.
This is too consolidative for me right now to really say what I think is going to happen.
Yeah.
Higher time frame we're bearish. Lower time frame on the 15-minute we're consolidating after making a low down here. Which was
I love consolidating markets, but I hate reading them. You know that it's just ugly, man. I hate trying to because when you're reading consolidated markets, you got to look backwards and look at the overall picture. Whereas when you're in a trending market or it's like post breakout or like post consolidation, you've had the breakout. Then all you have to do is look at the order flow. You look at the order flow, check out the breakout, and follow the continuation. Like trend is friend in that. Whereas like Rich is explaining there, it's super hard to read when you're looking at consolidated price.
The thing is, if you look at this as a downward trend, then you've effectively had a break of this downward trend going into consolidation, an attempt to break yet again back into consolidation. It's very sideways on the lower time frame, but higher time frame it's definitely bearish. But I'm not convinced that this is an attempt to push price higher. I really am not convinced.
It was. I think it's the Asia. It was the Asia session, or towards the end of the Asia session bull move. I think that would put me off slightly.
I mean, we took yesterday's low, and we're not even taking the high today yet. So
true. Pip saying, "Hey everyone, hey Pip, what's good? How you doing?" We saw DJ in as well. DJ, greetings, William D and Richard B. Like the hat, no cap. Can't lie, gotta love that hat, man. Rocking it, mate. Yeah, EU's just dropped off. Like there's complete consolidation. There's no movement whatsoever. So I think it's just gonna wait.
Yeah.
Now we got about 20 minutes.
I'm flat on AUD kryptonite. But higher time frame, I am a little bit more bearish because we have this bearish structure here, but we do have this very strong bullish structure. So there is a potential that this can come back to, let's say, a 50% fib fill and then start pushing up again. But for the time being, I'm flat.
Oh, damn. I'm just seeing this comment here. I'm down 9.5% on my 200k funded account. I don't know what I should do. Any suggestions? Oh. So you've got about $1,000 left. 0.5%. Where is the account? Is it P1, P2, or live funded? So are you in phase 1, phase 2, or live funded? That will help determine, I think, the best actionable steps moving forward. And where are you in your trading as well? Like, are you new to trading? Are you already a funded trader? Are you like? Let us know where you are in your journey in trading, and let us know whether it's it's live.
Live funded FTMO.
Oh mate.
FTMO doesn't have the consistency rule anymore, so you're free to change your strategy with them.
Oh man, that's savage.
Rule.
If it was phase one, I was hoping you were going to say phase one. I was going to say find an A triple plus setup and full margin it, and then if you blow the account, you blow the account. If you get it back, you get it back. But a live account, the only reason I say that is because if it's a phase one, you may as well just restart it, because by the time you get back up into profit, then you may as well have started all over again anyway.
Yeah.
Live. It's same situation. Go on.
Yeah, let's ask this. Let's ask it like this. How do you normally trade? Are you a swing trader? Are you a scalper? High frequency? What is it that you're trading? And then and then a follow-up question is, what is your normal risk tolerance per trade? Do you trade 1%, 0.5%? What is it that you trade normally? Just as a follow-up.
Yeah, and like I said, where are you in your journey? How long have you been trading for? What's your trading style, etc.? I think that's going to help as well. Because, dude, you're in a similar situation to me. I was about 7% down, or just slightly over 7% down on my account. Technically, I actually lost 10% due to the fact that I was in profit when I went into a drawdown. So I know how you feel. I battled it out because it said more about me as a person, and it said more about me as a trader than it did anything else. So that's probably the reason why I'd say stick it out and prove to not only yourself, but your accounts, and not only that, you guys who are watching me. I wanted to prove to you that I could do it. It's gonna be a long, hard journey, man. Like, how long? You're gonna have to severely lower your risk. You have two options. You can have a full risk and just hope you don't go into your drawdown stage anytime soon. Hope you have a bit of a winning streak. Or you're going to have to severely lower your risk. Try and build a little bit of capital back, like risking 0.1, 0.15 per trade, something like that.
So he says, I'm risking 1% per trade, and in my third year of trading, but I messed up last week, so emotional trading. All right. So if you risk 1%, then, I mean, you went down a little bit, mate. It's one of those things. It happens. All right. So
yeah,
the first thing that I would say is reduce your risk, first and foremost. If you care about the account, trying to keep it, then reduce the risk and try and just take the best setups that you can take with that amount of risk until you can get up to, let's say, 1% of 8% or 9% down, that kind of like thing, and then you could start increasing that risk a little bit more. But if you don't really care all that much about the account, it might be faster for you to just straight up go and get another account.
The only issue is that you're live funded. If I was you, if you don't care too much about the account, you understand that there's a good chance. Right, first things first, before Rich even goes on to reducing your risk, the first thing you should do is ask yourself, are you ready to be trading again? So you said you messed up last week due to an emotion in trading. Now, I'm not going to ask you what that emotion was. That's your business. But ask yourself, are you ready to trade? Go back trading. So I went through a breakup last year where I actually took some time from trading because I didn't know whether I was ready to continue trading or not. Turns out I was absolutely fine. I was fine to keep on trading. It didn't hit me too emotionally regarding the accounts, so it didn't bother me too much. However, I still took a bit of a breakout. Now, the question you've got to ask yourself is that emotional mishap, that emotional backstep in your trading, is that still going to affect you? Like, is the reason you had that emotions in trading going to affect you this week if you continue to trade? Like, let's say, for example, maybe your pet passed away and you had an emotional week in trading and you nearly blew your account. Well, you're not emotionally compromised because you nearly lost your account. You're emotionally compromised because your pet passed away. Now, if you're going to head to the markets this week or next week, going into Christmas week as well, you're going to be coming up to Christmas. You're still going to be emotionally compromised because of your pet passing away, and it's going into low volatile a week in the markets, being Christmas and that. So you got to ask yourself: are you ready to jump back into the markets right now? If not, take some time, relax, try and enjoy the holidays. Again, we don't know what emotional mishap has caused you to go through this drawdown. Take some time, go back into the markets in the new year with a fresh head. Remember, follow your plan, jump back onto a demo account, remind yourself that you can trade, remind yourself how to trade and how to stick to your strategy and your plan. Reassure yourself, talk positive, journal your emotions, and understand why you're feeling like that and how you can move forward from it. And then you want to go on to what Richard said and reduce your risk. Now, you've got two options in this. You reduce your risk significantly until you can claw a little bit back and then slowly start increasing your risk. That's what I did. Or you can do what Richard Wells did, where he actually worked out how much he had left of his account capital. He worked out how much drawdown or how many trades of drawdown he can go into. So, for example, if he averages a drawdown stage of 5 trades, 10 trades, then he knows that he can divide that risk by 10, 20 trades, for example, knowing that if he hits a more than 20 trade drawdown, his strategy may be having a slight issue because that's above his average rate of drawdown consecutive losses. So if that's the case, that's how many trades that you can have before you fail the account. Or you can, and this is the option that I'd say if you're in phase 1, but you're in live phase, so it's a little bit different. Or you have the option of saying, look, at 0.5%, I'm going to risk 0.5%, which is a full margin in theory, because you're fully opening up the remainder of your margin or your equity that you got in the account, and you find an A plus, not a gamble trade, not a news trade, not NFP, a full A plus setup, a setup so strong that in your journal you know that you would take this 10x over. Even if you lost it, you'd still take the same trade 5 minutes later if it presented itself, and then you risk the remaining margin that you've got, and then you open that trade up and you take that trade. Then whatever you've got, whatever you earn, so if you hit a 1 to 2R, so that would be a what? 1%. So then you'd be with 2.5%. So then you have 2.5% risk instead of 0.5% risk. So then you can start using, the account capital that you've earned through TPing to continue that trade. Just ideas. Just ideas. Be very careful with how you're going to trade it. Don't over risk. If you're going to use that last strategy, it's a very high risk strategy because it's the remaining equity. Don't go any higher than that because that's just stupidity, and that's not strategy. So the risks, even if you manage to claw it back, the risk team would probably look at you and say, you didn't earn that back, you just gambled that back. So you may have some issues there with risk. With the risk team behind the scenes in the Fivers. However, if you say, look, I did this strategically, this is why I did it, this is what I did, the risk team's going to say, damn, you know what, fair play, you thought about that risk. It may be a little bit brave and maybe a little bit, they may think it's a bit stupid, but you can vouch for it, you can verify it, and you can say it's thought out, it's not a gamble. So I think that's the best way I would go through trying to claw that back, but never give up. Never, like I said, only give up if it's in a phase 1, and it would actually be more beneficial financially and time-wise to start again. But you're in live funded, and it's a 200k, dude. That can do something for you. Or you got option 3 or 4. Your option 4, give up FTMO and come to the Fivers.
Yeah, I think that what Richard Wells did with his clawing himself out of drawdown, I think is the best way to do it from the sense of not wanting to lose the account.
Yeah,
I mean, if you get a payout on a 200k account, even if it's just 2%, that's good money. So I would think that the idea is to try and fight your way out of drawdown rather than giving up. My go-to always be reduce your risk as much as you can to give yourself time to either sort out whatever it is that you're working through emotionally, or work out whatever it is that led to that emotional week in trading, which could be a long time. It could also be very quick. Really depends on what it is that you went through without giving us details and without us asking for the details. My go-to would always be reduce your risk. Get yourself to a point where you are at least in line with your expectancy. If your expectancy is that you're going to lose half of your trades, but you have a positive risk to reward, which is a 1 to 2 as an example, then factor that into how much you can risk per trade to make sure that for the next, 10 trades that you take, that you're not going to lose 5 in a row and then, wipe your account out. So just work that into your calculations and understand that this happens to everybody. This that you're going through right now, the most experienced traders have also gone through this, where they've gone through a negative spin, they've gone through a negative emotion, and that negative emotion has caused their accounts to take a bit of a dip. It happens, right? But you've done the right thing in asking other people for assistance and asking other people for help with regards to your specific issue that you're going through right now, because it means that you're taking this seriously. It's not like you're saying, whatever, I'm going to just lose the account. So first step, great. Second step, I would say, is always reduce your risk and work on the emotional side of things before the emotional side of things takes over. Because don't let it become a habit. Don't let the, I'm having an emotional reaction, I'm going to full send my account in anyway, because it's very easy for that to become a habit very quickly.
Yeah, 100%. If you just give up too quick, if you're like, oh damn, I got into 5% drawdown, screw it, I'm going to start another account. Like Rich said, it creates that giving up mindset. I'm a big believer in clawing it back. Even if it's punishment, dude, like, even if it's like, I'm such an idiot, oh my god, how can I do this? Why did I allow myself to go into this drawdown? I shouldn't have. It's idiocy, it's stupid. Like, this could have been avoided. All right, cool. Your punishment is you have to get that out of drawdown. Even if you're like, oh, this would be financially better, this would be quicker, this would be so much more, this would be so much easier if I could just start again and, I know that I'd pass it. I was taking the easy route out. As punishment, you must get this out of drawdown because you are an idiot to put it in drawdown.
Okay, well, I wouldn't go that far and call myself an idiot for putting it into drawdown, because you should always be talking positively about yourself, or at least talk
we
about
should.
yourself.
Doesn't mean we always do. It doesn't. But yeah,
so, don't allow yourself to speak negatively of yourself and then still expect positive things from yourself.
Dude,
speak
100%.
Positively of yourself, and then positivity will follow. But if you speak negatively about yourself, you're making it difficult.
Speaking about positivity following, we have got the one and only Victor.
I didn't want to interrupt the flow. I didn't want to interrupt the flow. You guys have audio, right? I'm audible.
Yeah, perfectly, mate.
Not edible, audible.
Well, I am hungry, so if I had something edible, it would have been that. But we can hear you just clear.
Rich, I like your upside down pants. They are the best.
Why, thank you. Santa is not all that happy about that. He's kicking and screaming. You can't hear him because he's screaming into my ear. But anyway.
And I thought Santa, or at least there was someone walking around without the pants.
Yeah.
Maybe very, very, very far south, because I think the north is a bit frozen over, so it would not be smart to be walking around without pants.
His wife's gone to the shop with a bit of a breeze.
Who's gone shopping?
I said his wife has gone to the shops with a bit of a breeze.
Yeah.
Oh, yes. I think it's crawling back out of drawdown is an ability everyone needs to develop, but because everyone will have at some point drawdowns. We all do. Doesn't matter how good you are, how many years you're in the trade, how big your account is, how much experience you have, what your strategy is. We will always have more or less, but we will have drawdowns, and getting out of them is a skill. It's an essential skill everyone needs to have in order to withstand or to have longevity in this industry. Because if not, then whenever you start going into drawdown, you will lose your accounts, and that's not a good way to. That's a very rocky way of being a trader. And yeah, I think I did a seminar, a webinar about this on last year on the 5th of November. It is on the YouTube channel about fractional risk. And you can apply that, or in my opinion, you should apply that when you go into drawdown. And it doesn't matter, how deep that drawdown is. If you just apply available fixed fractional fixed risk combined with available capital, meaning that you're aware and you're only using, you're basing your position sizing on the available distance to your max loss on the account, whether that be a personal account or a prop firm account. There is no, you can't go wrong. And yes, it will take a long time, but hey, some things take longer, and the process, your edge, we should be focusing on trading the edge, not focusing on the account, whether we lose it or not. To me, that's the only proper way to trade, right? Only focusing on taking good trades with sensible position sizing, and whether if you do everything correctly, proportionately the risk, you should not be losing your account. You'll be taking tiny positions, but you'll still grow as long as you have a positive expectancy, you will grow your account in due time. And in the case of the person, or the user who said he has 0.5% left on the 200K funded account, on the second best prop firm out there. What I would do, I understand realistically, the chances that you will lose the account are very present, and that's fine. It's part of life. You won't win them all, and you will not keep them forever, perhaps. Start a new one, right? But do it right. Apply proper precision sizing on the new one, even if you have to go through evaluation. I mean, there's no other way. That's how it is. And you keep trading the one that is in deep drawdown with sensible position sizing, using available risk capital and fixed fractional risk, and it will take perhaps 6 months, maybe some even more. But I'm not in a hurry. I mean, if you, we all want things now, right? We want results as fast as we can, as fast as possible. But if you tell, a person, let's say you're building a business, and we all, let's say, as an entrepreneur, you want the business to become profitable and keep profitability in, as little time as possible, 6 months perhaps, or maybe a year. What if I tell you, I will give you a way to do it? It will not be 1 year. It will take you 3 years, but you will be stable, you'll be profitable, and you will have longevity. What's wrong with that? I mean, that's what we want. And so doing it correctly is way more important, even though it will take longer. It's better. We're not here to gamble and to do things quick. We've always said it, and we're not the only ones. I mean, it's something said in the industry so many times. It's not a race. It's not a sprint. It's a marathon, and that's how you should um, take it, slowly but steady, as much as possible.
Yeah, absolutely. Yeah, wise words from a very wise person. On that fantastic bombshell, I'm going to have to love you all and leave you. Victor, I shall leave you take the stage. Guys, can we absolutely smash that like button for Victor? Let's get over 150 likes on this stream. Make sure we all welcome Victor with open arms as he drops these mega bombs of value on you. So big thumbs up. Thank you very much for joining, guys. And I shall see you, or me and Rich shall see you on Monday. Guys, if you haven't already, make sure you get yourself in the event and secure your spot. Cannot wait. It's going to be super exciting. On the Christmas week as well. So if for those of you who aren't going to be joining next week, maybe you've started. I've had a few messages from you guys in chat and other guys who are in the trading industry saying that they're clocking off for the year. And so for those of you who are clocking off this week for the year, or for the remainder of the year, I should say, Merry Christmas and have a fantastic New Year. For those of you who are a bit like us and just can't seem to leave the markets no matter how much we want to, then I shall see you all Monday. Guys, thank you very much. And I shall see you all after the weekend. See you later, guys.
Cheers, William.
Take care, William. Have an awesome weekend. All right, so here we are, Richard. We seem to the release of the interest rate decision on ECB seems to be now picking up. The moment I put the arrow was the moment the release was already out, but initially was a non-event almost. But now you can see the market moving accordingly. The rate has been left unchanged at 2.15%, and we're seeing some price action. I would have expected a bit more to be fair, but it's okay. Also, we saw the pound, the interest rate decision. You can see that big candle. This is typical of interest rate decision coming out. This is let's see how big that candle is. That's a 46.7 pip range, 1 minute candle. That's more like it. And we're getting close to that area again. Let's go back to the H4. There was an area yesterday that I was looking for a possible reaction. We actually didn't reach it, but now we are. But on this second, the timing that we're now reaching this area, it looks to me like it's just a matter of time until we break it and actually go to the next level. That's the crossroad where we're going to be looking at if the market is going to continue further higher, which is more likely, I think. Or have a react on this bearish quasi, which would mean that the market would be retesting lower levels, that daily order block that it was retested yesterday. So this is where we will be, you should be watching which of the two, direction will price likely go. At least that's how I read it. What about you, Richard? What are you watching? Where do you think the opportunities are today?
Well, first of all, I've been having a look at NAS, so I've had most of my focus on NAS, seeing as the US pound and euro had high impact news today. I took a trade this morning on NAS, a small little buying as per my new strategy on NAS specifically, which worked out fine. But the idea was I didn't want to trade EU and GU specifically. EU didn't quite come down as far as I thought it would before the news event. Now with the news that we've had now, I am going to have a look at EU a little bit more in-depthly to kind of like see where I think it's going to go, because I'm more of a reactionary trader than I am a predictive trader. So I'm just going to wait and see what this candle does once it's closed on the 5-minute, because this is the news candle itself. So I'll wait with that one first. When it comes to GU, I think GU has a good chance to potentially push through 134.20, 134.25. I think there's, if we carry on going as strongly as we are now, the area right about here seems like a relatively decent area of support / resistance where we are currently right now. So if we can break through this and not really retest or fail the retest, and by that I mean like we push into it and then we fail the retest and push lower. But if we succeed the retest in the sense that we break through, test, and then continue higher, then there's a lot of price action, I think, or areas for us to come and test. First and foremost is this area over here that I mentioned, the 134.20, 134.25. Apart from the area where we are currently, this seems to be the most logical area for myself. Even though we do have a base over here, which was wicked once, it really depends on what we do over here specifically. After that, I think I'm going to have to search for a secondary area because there isn't one specifically that I can see straight up immediately. This area over here is the one that's kind of screaming to me a little bit.
Which one?
This 134.20-ish. That is first and foremost. And then
yes,
the
that's the
inverse
same
of that,
level I have too.
yeah, and the inverse of that would be, should this fail, hypothetically, let's say it does fail, it will have to come back to the lows of today, where we had the news event, and then probably, down to 133.31, 133.23-ish. That's assuming it fails this. I don't think it's going to fail this, though. I think we're going to break through.
Yeah, it looks to me as well. If you look at the price action for the whole consolidation from the 3rd of December, basically it's just one big consolidation trying to push higher. And we're currently seeing, let me switch back to mine ever so quick. Okay, so what I'm seeing on the same, let's see if I can, if we can remove no, we can't. Okay, well, we'll leave that. If we consider on the higher time frames or looking back just a little bit longer, all of this, what we're seeing is just one big consolidation with impulsive movement to the upside, which are creating higher highs, right? Very simple, right? That's one impulsive move, and the other one there it's creating higher highs. But if you consider on the bearish side, on the sell side, it's not breaking, it's not expanding to the downside, right? It's making higher lows, meaning it's and that all of that is within it's coming back to the consolidation we had. This is not an order block. This is just the range it was trading before, right? That's the range it was trading before, and it's only coming back using it as a base, basically. And all of that tells me that the likelihood that it's going to break, and that's why I said the likelihood it's going to break and go higher is higher. The probabilities are higher for higher prices. Maybe during this the rest of the week. In any case, my expectation is, but I mean, it's only probability. It can still reverse and go the other way.
Yeah. But
there's one thing as well. I beg your pardon?
I'm saying it is probable, but is it likely?
Not really likely. I don't think so. No, I don't think so. Especially if you consider that the reaction from the interest rate, which is that big handle, was that's a bullish reaction. Obviously,
yes.
There's no other interpretation of it, and it's been drifting higher ever since.
We do have CPI in 15 minutes, though. No.
Let me double check that.
8 minutes. We've got CPI for the dollar in 8 minutes.
Okay. Yeah, that could change things, but we'll see. We'll see how that changes. Perhaps that could initiate a bit of a retrace. But I don't think the CPI, or maybe I'm wrong, but I don't think the CPI would overshadow the interest rate decision of the pound. So I would still expect, even if it's dollar strength, we'll have some retracement, but eventually we will continue to going higher. At least that's the sentiment. That's the technical, the market structure so far. That can change, with time. So we'll have to see. But I think, compared to, it's pretty clear when you're considering the H4, that the market is trying to get a grip on it. It is climbing, just doing so. It's taking its time basically. But these areas above the, perhaps I should not start with, visit the higher time frames just to give a little, context of why I have these order blocks there. But we haven't, on the monthly time frame, there is a supply area above us, which we haven't touched yet. Sometimes the market comes near it, approximates it, but approaches it, but never really touches it, and doesn't come back for a long time. But it doesn't happen very often. Most of the time, you'll have a front running reaction where it moves away from it without overlapping the area, but it will, in relatively little time, will come back. Now, little time can still be a couple of months because this is the monthly time frame. But what I'm trying to, let me take these away because they're obstructing. The order block has not been retested, right? There's a little space right there, and that tells me that in all likelihood it has a good chance of coming back and retesting that monthly. That could be this or next month. So it doesn't really help you in the timing. But if you know in advance that it's going to make a higher high on the monthly time frame, on maybe next candle or the one after that, that can guide you, or that can give you an idea what to expect in the next couple of weeks and eventually days. We also saw on the weekly time frame, we are in a weekly supply area. So that's, if we get a reversal pattern on the daily that has alignment on the H4, then we could start looking for a short. But that's not the case. If you go to the daily time frame, what we are seeing here is a very beautiful, healthy reaction or retest of a fresh order block on a daily time frame. That tells me it's doing what it's supposed to be doing to continue climb higher. You have an impulsive move to the impulsive move bullish, a little consolidation, a little retrace, and let me use this one, another impulsive move up, and basically now we're just going sideways. In the process, we retested the order block and came back quickly. And to me, this is just price action trying to climb up higher. So on the H4, the daily, and considering the that structure to be touched on the monthly, likely to be touched in soon, I think things are pointing upwards for GU. We'll have to see. And the reaction of the interest rate decision was one of those things that can change the market structure, fundamentally, because it's so powerful. And that was the reaction so far, was in the direction of the market structure already. So it only confirms that we're likely to be continuing going higher, likely, not guaranteed, but likely. So yes, I'm still looking for. Let's see. We had that little reaction, so I didn't scout this short, but that would be something that I typically will do. I don't like going against the move once we are the move that is created by high impact news like interest rate decision, because it can continue going pushing against you for a long time. Um, but if it was an interest rate decision that made that big candle, then for sure I would be interested in scalping that, taking that reaction, because we could see that reaction coming from a mile away before it happening. What I'm talking about, it's this price coming back to this order block and moving away. That's 5.5 pips. That's plenty. That's enough to scalp it. That's 7 pips, and it hasn't touched the second time. So yeah, I like it. It's I've said it yesterday. GU has been moving very, very technically, reacting to these structures very precisely, and it's this shows that same behavior again. But it's very, very strong. I expect it to just continue and going to the next structure, which is, as you said, at the 34.20 sum, all the way to the head of the bearish quasi, meaning I'm actually expecting, because there is a H4 bearish quasi there, but I'm expecting the quasi to fail, right? Ooh, look at that. What was that? Did you guys see that?
That was CPI.
That was CPI. All right. I wasn't looking at the time. That's a huge reaction.
Sudden as well.
You could definitely say that.
Aren't you happy you didn't try and
Scalp that.
scalp it
Yeah,
down?
yeah. Yeah, but I wouldn't be in a scalp if there's high impact news coming up. That I would be. I would have to kill it or not get in. Um, I could do it now, after the news comes out, but I'm not doing that.
No. Somebody was asking
And
earlier
me,
about
you,
2 minutes
yeah, go
before,
ahead.
2 minutes after, read folder news information. It's just like, no, just don't do it.
Yeah, it's you're not here to gamble, right? This is a serious business. Even though there's no one watching, no one's gonna come you. There's no risk manager gonna come to you, or maybe they will send you an email if you're funded. But you're not. There's no one gonna come to your office, telling you, you did bad and you're in violation of some risk parameters. That's you. That's your job, your own job to do that. And so, even though you can, you shouldn't.
Ooh, even gold.
Let's take a look at that as well. Then gold. That's a huge reaction.
In relation to
$15.
yeah.
Go ahead.
Sorry, I was just going to say it's a huge reaction in relation to the attempt to push it lower. So the whole day it's kind of it's consolidated and then kind of drifted down ever so slightly, and then now to have a sudden push up, it's probably going to continue like this.
Going higher, you mean pushing higher?
Yeah.
Hmm. So have you been taking trades today in before the news?
The only one that I took was a NASDAQ buy today.
Okay.
Yeah, it's the only one that I had, and then I had a NASDAQ sell last night, just before New York open, which was a pretty good one.
NASDAQ
But
sell.
that's the only
Let me take a look at that before New York
So
opens.
so I took a sell my time 16:15. So I'm UTC plus 2. So
UTC plus
I don't
C.
know.
Okay.
I don't know what it is in relation to yours, but I'm not going to ask you either.
Yeah, I see. So that's big. That's a huge movement right here.
Yeah, it was on. I took it on the 5 minute.
Okay. Maybe you should we should take a look at from your screen. So that will be quicker instead of me
Yeah, I have
trying to
it
find it.
here.
Yeah.
So yesterday, what we had was this slow ascent, pushing price ever so slightly higher. We had some consolidation. Sorry, we had some consolidation over here as we were coming out of Tokyo, going into London session. We had this slow ascent. It didn't look all that strong to me. We had this area of consolidation over here, where price just really lost all its, let's say, will to push higher. We created the high of the day, and then we had the very first strong reaction out of this area. So if I had this consolidation pushed to the side, there was a little attempt to push higher than the consolidation, but then it immediately failed and then started pushing lower volumetrically in relation to how it was reacting previously. Price came back into this high point or this area of consolidation, however you want to however you want to see it. To me, it was a consolidation attempt at a break, a retest, and a failure. So what happened was it came back, retested this high point, 1, 2, 3 candles that looked to me like it really was rejecting this high point. This candle, bearish candle, then started pushing down significantly, strongly in relation to the previous candles. As this candle closed, I took a trade. Initially, I had my stop loss just above this candle swing point. I was in drawdown for quite a bit of time. This is on the 5 minutes, so about 20 minutes or so, and then it just started dropping down. Initially, I wanted to aim for these lows over here, this last attempt to push price lower, and then failed, and then we had multiple bullish candles pressing it higher. I initially wanted to aim for this area over here because we'd already basically swept this area of consolidation over here by that time. So we'd already pushed through. So I was like, okay, if it really wanted to react off of this area, it would have, and it didn't. It broke through it. So somewhere over here, this was a 1 to 2.5 R trade. When we had this candle over here, after that attempt to push higher, wicked into my drawdown. When it closed, I thought to myself, I'm probably going to just push my stop loss to just above that last swing point, and I'm just going to let it run. But I ultimately decided against it. I decided to leave my stop loss where it was and then just left it. So that was my trade of last night. It was a simple consolidation, break, retest, continuation. And it was due to the fact that we had this slow upward momentum just dying off, basically. And then the trade that I took this morning was a similar trade. We had the highs of Tokyo, which was a significant area in my opinion. We had a little bit of consolidation coming out of Tokyo. We had a low point. So if this is the low of the day, and this was effectively that high within, so low, high, higher, low, higher, high. This was a higher low, and this was the higher high coming into into London. It was also a break and retest in my opinion. So we broke the highs of Tokyo, we retested it, and then we started to push up volumetrically. Got into this one a little bit late. I would have wanted to get in on, for argument's sake, either that candle or this candle over here, which was effectively the break over here and then the retest over there, and then entry on that candle and then try and ride it up. But I did not. I was busy talking to Will at that point, and I kind of missed this initial one, and then I saw the secondary one. So I was like, okay, so we'll take this one. But even this one I was late. But it was a 1-to-1. Now, unfortunately, right about this area over here, I started having internet issues. My terminals froze. I got kicked out of StreamYard. Had to reload. And I decided I'm going to just cut my trade at this point, because if I'm having internet issues now, I don't know how long my internet issues are going to be. I cannot try and cut the trade short should there be news or something that comes out. So if you have a look at my trade history over here, you'll see the entry point is over there. A little bit late. I closed it here. I had already closed the trade on this candle, on this green bullish candle. I had already closed it there, but it didn't respond. So had to close, restart, and as I restarted it, it closed the trade there. So unfortunate, but it was a decision that I had made. Ooh, why did it close that now? Yeah. That was my trade of this morning. And then I think NAS is potentially going to come. Potentially going to come and test our 15-minute base area now, and theoretically it should probably break through it, I would think. So I have a area of consolidation here. I don't know if it would form in line with your the way that you would analyze the market, or the way that you would see the market necessarily, but to me this area over here is an area of of interest because of the fact that we had struggled to pick a side here. I always like to think of the market as like an arm wrestle. Bulls on the one side, so it's just two people like wrestling each other with an arm wrestle. So it's a back and forth the whole time. The bull in this case is trying to, or bears in this case is trying to push the price lower, which they did for quite a while. They were really, pushing the bulls down towards the pad. But then at some point the bulls, they started to, just resist a little bit. So they were at that juxtaposition, like we're back, we're forth, but now we're kind of like just stuck in this one area. And then eventually they got overwhelmed because they got tired. But because this is an area where there was historically that back and forth, I expect if price were to come back to it, that, or if price were to go bullish, that this is an area where they would hypothetically try and come back to. Because at this point, this is where they lost the race. They lost that arm wrestle quite convincingly. Now they're going to try and push it back into this area. So I want to see a reaction here first and foremost. And then based on that reaction, I can make a decision to say, okay, price is most likely going to push higher, or price is going to reverse from this point and start pushing back lower as it had done over here. So I am just waiting to see what NAS is going to do based on this base of mine. It's not even a 15-minute base necessarily. It's just an area of interest for me right now.
Not too long ago, I was listening to the radio, and I heard, and there was a song that made me think about you, Richard.
About me? Wow, I feel honored.
Yeah, about you.
Wait,
I
let me
was.
hear which song it was first.
Beg
I
your
might
pardon?
just be offended.
You might be what?
No, I say, let me hear which song it was first. I might just be offended.
No, there's no offense in this. I was I thought about the name of the band, and it was Ace of Base, and
Oh.
that made me think about you. Nothing offensive about that.
Can I ask why? Why Ace of Base? I know Ace of Base, but why specifically that one, and which song was it?
I saw the sign. I think the title is, or at least that's the
Okay.
chorus.
Yeah.
And it just, I mean, it was something that I heard on while traveling. I think it was in the business lounge. So I don't know. I was sitting somewhere. It wasn't of my choosing, and but
Okay.
I heard it, and I said, "Hey, that makes me think about Richard."
Did you think of me fondly in that moment, or was it you giggled at something? It was like, oh, this is a silly song. It reminds me of a silly person, or
No, no,
what?
no, not silly. Not at all, not at all. Just because you trade your bases, and that's the Ace of Base, and
Okay.
yeah,
Ace of
that's
Base,
just
and I saw the sign. Okay, so a little bit of a connection point there.
yes, yeah. Somehow my mind, connected the dots, and you are you are associated with base because that's how you the term you use to indicate the patterns that you trade. So
I also play bass,
automatically,
so
you also play bass. Oh, okay.
I
All right. So
also play
there's
bass.
more meaning to that.
Yeah, my bass guitar is standing over there at the moment. I'm probably going to be playing after the stream.
Really? So
Yes.
you're all about different layers of bases.
Yes, you can call me. You could say I'm very based.
You're a very solid guy.
Very, low tones, low tones.
So I agree with you. I think that area is is a good area for price to match that's what a lot of the times where what you said is just like I think too, when you have a struggle at some point, the in order for the other side, the one that lost the battle before, to um, show that they are now winning and they now won, they are on the winning hand, they need to beat the other side at that same battle.
Yeah.
And that battle is that square you have up, above current price on in NAS, on the NAS. So that
Yeah.
means that automatically is going to work as a magnet for for both sides to show their strength. That's the arena, the battle arena, to to assess who's the winner, who has the upper hand. The market is always trying to show and sometimes manipulate, right? Which side is the winning hand, and sometimes it shows one, but it's actually not the one. It's the second one, right? So that's the manipulation. But in any case, it happens in the same arena. It has to get back there, and then price action will show you eventually, whether with some initially some fake movements, but eventually it will show you the winning side.
Yeah, I do like the analogy of personifying the market. You know, it's my own way of looking at it, but like it's made the market seem less intimidating to me. Because if there's this analogy of like, oh yes, they're just arm wrestling, to me it makes the idea a little bit more palatable than oh, somebody's trying to manipulate or somebody is trying to force it in a direction, as an example. But not that I do not believe in those things. I would rather just say that I try and not focus as much on it, maybe as some other people would, to say that, okay, so there's manipulation and then the follow-up is the actual movement. It just makes me feel like the market sometimes a little bit disingenuous. So I don't know, just I agree 100% with what you're saying. Obviously, I'm not disagreeing. I'm agreeing with what you're saying. It's just I'm using it in my mind as a different way of, I don't know, play. You know the way that Void Akram would like, he would give his movements like protecting the queen, or it's that same way. It's that same playful nature to try and take away this stigma that the market is this scary big thing. And just I don't know where I was going with that. I lost my train of thought halfway through that. Seriously, I lost my train of thought. I have something to say. I was just like, yeah, there it goes. It's like,
Yeah,
come back.
the market isn't an ugly beast, although sometimes it makes you feel like it. But
Yeah. And I lost my train of thought there completely, man.
yeah, no problem. But
might have ADHD,
yes.
but I don't know.
Someone talking, reacting to our base conversation from a few minutes ago. It's all about the base, that's getting philosophical.
Yeah. No trouble.
No travel, and 20 hertz. I think that's very low, right?
Yes, it's on the lower register of sound waves is 20 hertz.
Yeah, I'm not gonna put that on the screen, but
Whoa!
yes, I'm not gonna do that.
Jafar, that's wow.
It's very visual
Yes.
and graphical.
Look,
This is,
I do love rock and metal music. I consider myself a rock and metal enjoyer. But that's dark, mate. That's very dark.
All right, so now we piqued everyone's curiosity. Everyone is going to the chat now and checking what is so dark that Richard is talking about, and Victor is unwilling to put on the screen. So, yes, I think our minds, they work better when we can visualize things, because the market is very two-dimensional, right? It's only up and down, and if you can assign certain characteristics, and if to you, to let's say for Akram, it is for him, maybe he's a chess player, and he has already certain personas or characteristics or traits that are associated with certain chess pieces, and for him using that context to give the market more nuance, then by all means you should do that. and for you it is, using other stuff, and for me it is using, you're seeing you're watching two guys arm wrestling. If that works for you, that's fine. Other people say tug of war, and you know it's okay, as long as it's something that resonates with you, because that's basically what that everyone is doing. They're using what for them is an easy shortcut to help them personify the movement, so that they can have a feeling and interact with it better mentally. The market doesn't really care for what we think of it,
Of
as
course.
long as we it's going to do its thing, regardless if you see an arm wrestling guy or Akram sees a queen walking elegantly, dance along, across the dance hall. It's about the whatever makes it easier for you um, to have it visually clear what the market is now likely to be doing. That's
Yeah.
what it is, right?
It's the
When it's
idea
calm.
of personalizing it for yourself, but also claiming ownership over what you're seeing.
Yeah, and I think building your narrative is exactly that. And you need to have a narrative. You need to have to and that comes with screen time, right? We When you come to the market the first time, you don't really know what you don't know. You haven't seen a lot. You don't know what is like a huge candle. That's a relative term. What is huge? How much is that? And it only once you have experience, that experience is basically data. You've seen it so many times before that you can say, okay, considering everything that I've seen so far, this candle is huge. It's gigantic.
Yeah.
I've never seen it before. And then but you have to have some kind of comparisons, reference, right? The reference of comparison, in order to assess that judgment, um, and what tools or what visual mental tricks you use to get that comparison, that relative comparison. It's up to you, whatever works for you. This is euro dollar, and it is breaking out to the upside. We are seeing an outside bar on. That's the treacherous thing before the news, and that's why you should um, you know abstain from trading as much as you can. The EMAs you have there, what is it? What EMA is that? That's a beautiful
This is a
retest there.
50. Yeah, this is just
50,
a
50 on the
yeah,
four
this is just
hour. Very tactical,
EMA on the
actually.
hour,
Very,
4 hour.
very tactical. Yeah, 4 hourly 50 EMA, I suppose, right?
Yes, yes. I
Yeah.
like the idea of it being a little bit more weighted towards what is currently happening versus what did happen.
hmm Yeah. You can see the retest of the order block right there. I mean, I see the word through order blocks and quasis, and you can see the retest of that. That's what happened before, and before the news as well. The last three candles, you see there was a bullish order block, bullish engulfing, and then a bearish outside bar, very powerful, in the market reacting off of it. So if you don't look at previously, if you don't look at, put things into perspective, you would think, it's giving you all kinds of mixed signals, but in
Mm,
reality, it's not, right? The EMA is on that higher time frame is very, very clear what direction the market is
mm,
still holding, still respecting. I think that's a beautiful EMA retest. It has 1, 2 from before when it reclaimed the order. The before that, it has 1, 2, 3 on the fourth. It had a little squeeze there, but eventually. You can clearly see that the market continue very, very strongly. So, I mean, it's very, very technical. I said that about pound, but EU is on order blocks using the market structures. It's a little bit of everywhere, and not respecting the order blocks precisely as pound is. But still, it's very nice to see that the market is it's not always very clear to read, but now it is.
mm. No, definitely. I think also the idea is that it doesn't always conform to the same, the same idea that it's always going to respect the EMA as an example. But in this case, it is just producing these higher, lower, higher. Sorry, not lower, higher, higher the whole time. It's just moving through the motions, and when it's moving through the motions, it's easy to have these areas where it just reacts so beautifully off of, as an example, EMA. But I mean, you have times where it just absolutely just does not respect it at all. But in this case, it looks really good. It's flowing properly. EU as well, like it looks good, really does.
It does. It does. Slipknot. Haven't heard that band in a long time.
I do listen to Slipknot, yeah. I haven't listened to them all that much recently, but I do sometimes listen to them.
I've heard one maybe of this list, maybe two, no, three.
So two of the bands that are there are known as the thrash metal band. So that's Slayer and Anthrax. They're part of the Thrash 4, of which Metallica and Megadeth are ones as well, part of that. Sepultura is a Brazilian-based band. Slayer is American. Overkill is German. Bathory, I am not sure. I don't think I've heard of Bathory before. Creator I've heard of before, and Anthrax I've heard of before. Don't really listen to them all that much.
Okay, all right. Yeah. What can I say? Music is beautiful.
I listen to pretty much any sort of music. I do have my favorites, obviously, but I think music is a form of expression. It's a form of calming people. It's a form of excitement. It's a cultural thing as well. It's something that people can come together over. It's also a social divide that can divide people as well. So it's got all of these constructs that you can put into and pull from music. It's also just, when it comes to language, it's also just a language in of itself. So it's incredibly diverse, incredibly interesting, and it's a good talking point as well. I love talking about music, specifically more on the playing side, because listening to music it's personal. It's preference. But when it comes to playing music, it's more structured. It's more. This is what an A note sounds like. This is an octave. And, it's clear cut what it is.
Objective?
A little bit more so, yes. Where your likes and dislikes are way more subjective. So yeah, I can appreciate both sides, but the one is more interesting as a talking point, I think.
What about the genre you play? You said you play the bass. After you play the basses on the charts, what genre do you play then?
I'm predominantly rock and metal focused. I've recently looked at going into jazz a little bit, but jazz bass is a bit more technical. Yes,
Jazz, a little bit more technical?
It's got odd time signatures, which is strange. So if you're looking at a bar which has 8 segments as an example, you could have a time signature that's odd, like a 4/3. So in 3 bars, you have 4 segments over the 3 bars. So it can be a little bit more complicated than just straightforward a four notes within 4 bars kind of like thing. So it's just a little. It's something to get used to, the odd time signatures.
Interesting.
Or polyrhythmic signatures, let's rather say.
Probably that is what makes it attractive, because it doesn't conforms, and now that you're saying it, there's something special about jazz, right? It's out of the, it's like disorganized but very organizedly done, so
Exactly.
right, like it's neatly disorganized.
Yes, it's got a structure, but the structure is odd. It's not as you would anticipate it to be. When you think it's going to go over to a specific measure, it changes its range completely, and you're like, okay, that caught me off guard. What now? So
Exactly.
yeah,
Yeah, it's like an organized chaos.
So yeah, Mustafa was saying, but with Jazz you don't play time signatures, and on all the modes it's Lydian. So you also have Malo Lydians. So Malox Lydians. It's a difficult word to say. Malox Lydians. It's the same as a Lydian, but it's 1 to 2 measures further away. So it's very. I like the polyharmonics. Yeah. It's poly meaning more than 1 or 2 harmonics. Yeah, there we go. Malox Lydian.
Yeah, I'm not too versed in the one, so I will just listen and learn.
No, it's
To you guys talking about it, I mean.
that screwed me over ever so slightly. -6th. Yeah. Yeah.
All right. So what is the market doing in the meantime? Is it being jazzy or is it being polymorphic? What was it?
It's as of right now, with the fact that we've had news come out, it's definitely not jazzy. It is definitely a bit more structured, less room for multiple polyrhythmic tones.
All right. That sounds cryptic to me, not being so so into that, but I like it. I like it. I like how you bring it back to another context. Right? I think we just talked about it before. How you personify it and give it a face. In this case, a melody, perhaps, or a genre. All right. So this is euro dollar. What do you think? Is the market going to continue to go higher? That's the question I think most people who are trading. Is this how long can this move take? Use your technical analysis if you don't mind, Rich. And is this all it has to go? Is this the level it was going to retest? Do we have a reaction that indicates something above the other or not?
If we are on the higher time frames, the 4 hourly as an example, we have prior to the news. So this was 2 minutes ago. So this is a new 4 hourly candle. We've had this upward moving trajectory that we've had that is just a continuation of what has been happening previously. We have a high point all the way up over here, which was in line with a previous test area where we had a reaction. But the reaction from this order block, there we go. This order block over here, maybe not your definition of an order block, but in my case, it's how volatile or how volumetric the movement was out of an attempt to push higher. There was failure. Here we had a very big wick. This is on the 4 hourly still. After just wicking into that area, and then we started to push lower. But the fact that we did not break any significant low areas with this downward push, this initial downward push, makes me feel like we are definitely still within a bullish structure. Even though we have ever so slightly just broken and closed lower than this area over here, we came back into a base. So multiple candles, base area, and then a continuation up higher. We came back into that down over here and is reacting now. The news itself did not push it any lower. The news, in fact, is starting to push a little bit higher. We've broken yesterday's highs. We've wicked it at least, and it seems as though we are still close to it right now. I do think, based on this information, that we will probably try and push back up to. I
just love how you you play with those words. Go ahead.
I do feel like there is if I have to go on probabilities, I would say there's a higher probability of us potentially coming to retest this area where we've had one reaction of previously already, due to the fact that we are still in this higher highs, higher lows movement. I have got a lot of purple on my screen now. It does feel as though there is the potential for it to want to push up. The only thing that I'm struggling with is the fact that this hourly candle, or the 4-hourly candle that we've had now, has both wicked above and below the previous 4-hourly candle.
That's a little bit dangerous.
Yeah, it just feels a little bit... I'm wondering if it would have come to this area had the news not come out. Would it have naturally gravitated towards this upper end had the news not forced it into this area? It doesn't feel like it is particularly massively strong, but it does feel like it wants to carry on going higher. I mean, what do you refer to this? An outside bar? This 4-hourly candle in relation to the
that's
previous?
not an outside bar because it didn't close outside of the range of the previous candle.
Oh, okay. So it needed to close up over here.
That's a regular, exactly. That's a regular engulfing. But the one before that was a bearish outside bar. But that's the anticipation of the news and the initial move, expansion of volatility, that you also automatically get outside bars. But those are treacherous ones to trade because it's not representative of one side taking control. It's more representative of the market expanding the range, and automatically it will create outside buy. So you need to. It's important for those who are watching me and talk about highly of outside buy. The outside bars. There are certain outside bars and certain moments where they're not as indicative of the future price direction.
This is on the hourly. I've just moved this base area just to incorporate the last highest price before pushing lower. And we've just wicked into it. So this still seems to me very bullish. I think the reaction was down here, specifically with the news, and I do think that organically we may have come to this point at some point had the news not been scheduled. Let's say potentially we would have reached this area down here, and we kind of would have slowly started working our way up to this area right now. On the hourly, this follow-up that we have right now is subdued in relation to the previous movements that we've had. Large wicks above, larger wicks every single, this is on the 15-minute, everyone has got a larger wick, but we still haven't produced a lower point. We haven't broken lower than any of the previous candles. On the hourly, we're still quite bullish, I think, based on this candle specifically. And we're not getting the reaction off of this base area that I thought we would had we naturally come to it outside of the news, as an example. So the expectation was if we naturally came to this point and we've already had a singular reaction over here, which wasn't particularly strong, I would have expected a singular reaction similar to this one had the circumstances been exactly the same. But the circumstances are not the same. Circumstances is the news pushed it into this area. So what I'm thinking is there's probably going to be a little bit of resistance in this area right now, maybe a little bit of sideways action, and then a continuation of this initial.
It makes a lot of sense. It makes a lot of sense because the that's the 1 hour time frame, right? Yes, it is.
Yeah, this is just on the
it is basically retesting the other side of the range, and on the higher time frames, we can clearly see that the market is poised to go higher, at least more likely to do so. But when you zoom on the H1, you just see the market ping ponging, a range, and it's not likely that a price breaks out of it with the same impulse. It went from one side to the other because that's what it did, right? From the lower side of the range to the upper side. And usually in a range, what you get resistance on both sides, right? So support on one side below, resistance higher. And that resistance is kicking in and likely have some kind of an effect. And it will likely cause what you just mentioned, which is a sideways movement until all of that selling pressure that creates the resistance is consumed, and then price is then free to continue higher, according to the higher time frame market structure. It's likely to happen, though. I agree.
I, I just I don't know. When it comes to the idea of the momentum of it, the momentum driving it into this upper portion of the range does not seem like it was. It doesn't seem like it was impulsive, even though it's an impulsive move. Because
Mm-hmm.
you have the opposite direction, but it doesn't seem like it was not thought out. It seems like it is indeed where price wants to go. It's indeed where price wants to be continuing after the initial move. Where the way that I
Okay.
see impulsive move would generally be something in the line of, we're moving momentously in that one direction, and then it just fails, and we go in the opposite direction. So this would be an
You mean
impulsive.
aggression?
Say again.
You mean aggression? Like
Yes. Yeah.
there was a battle. It was explosive, and someone
Yes.
won with knocking out the other one.
Yes, where this does at this point in time seem like this wasn't just impulse, this was thought through. So the price is moving up with intention, and the follow up seems intention as well, like there's intention behind it. Where this move over here on the left hand side, if I had to compare it with what I'm seeing right now, even though this is on the hourly still, and we still have 50 minutes to go before it completely closes out, but this reaction that we had here was explosive but had no intention. The push wasn't to push it higher. It was to get it into this range for it to push lower. So we'll see what happens here. If it does kind of just drift a little bit towards the side in this area, then I know that this was intentional. This move was intentional, and the follow-up is also intentional. And then I would believe, or I would gravitate more towards the idea of it pushing higher. I don't know if the intention section that I was referring to now made any sense.
Well, I understand what you mean. It's not literally that the market has, it's not a persona, right? We personify the market. That's not the case. But there are similarities because when it's a collective intention because it's not one person; it's the collective market, and you can, as a people, right? It can have, um, like any country or in a stadium, you can feel certain emotions, and even though it's not a one individual, it's a collective emotion, and that way you can still, without exaggeration. Someone asked, Scott Waters. Actually, we have a couple of questions in the chat that I think we could touch upon. One of them being, let's see, I marked a couple of them. Let's see where it was.
Interesting one.
Okay,
This.
so I have someone someone mentioned. Okay, so I'm gonna go back all the way from where I started. Someone asking about gold. We'll take a look at gold perhaps in a little while. Um, Before we do so, Peter, my friend Peter, who has been studying with eagle eyesight my strategy, has been asking, on point, very sharp, razor sharp questions about my strategy, and I believe he reversed engineer my strategy a lot because I see the depth and the nuances of his questions, that he understands, the actual movement and phenomena behind the strategy. So kudos to you, Peter. Very good, very good. Um, Peter says, I'm currently struggling with a 50K instant account. I won using your strategy in a competition. Good for you. The account has 0.5%, so 250 profit target and a 15% consistency rule. I'm not too familiar with that consistency rule, but it does not matter. Good for you, Peter. And there was one thing you said, the challenge is that when I use fractional risk, I can barely reach the target because I only get 3-4 valid setups a day. Um, I'm not too familiar with the rules that you're mentioning, Peter, but I suppose the profit target is like a daily profit target, and using a fractional risk is not giving you enough profit per day. So that's why you mentioned you only get 3-4 valid setups a day. So I end up floating between break even and slight drawdown. Okay, I you know they are trading is difficult enough, and when you have extra rules like consistency rule, I can understand that, you know, they are for a reason there, right? Assuming that the prop firm is actually, looking for consistency. Although sometimes I think they're just using it to, you know, lower the probabilities of people being able to reach their targets. But it's difficult enough to have a strategy that is profitable, is stable, and you're able to execute consistency in the market. And you know these consistency rules make it a layer extra difficult. So I personally, I know you won it in a competition, so you probably didn't choose that specific program. But I personally look for for programs that have less rules, because you know it's difficult enough. We don't want to make it even more difficult, or having rules that make it complicated to reach the targets. That is what I can say. You're asking me how would I approach that. um, the thing is, if I understood correctly and you need more daily profits, uh, what will happen, and I don't know what is your risk reward profile, but in my case I will have losses, 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 big win, smaller losses, 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 much bigger win. And so what I need is just to have one big win and I will reach my target on that day. um, and if not, it would force me to take bigger risk, and that's not a good reason to take bigger risk. We should only be taking bigger risk because it's adequate. So it makes you actually want to do things that are not probably going to go in the direction of not being responsible. So Peter, I would, I would be forced to go for um, bigger risk, just trading the same thing, just increasing the fixed fractional risk that I'm taking. Or what I would do is I would. There are a couple of things, but I can discuss them here. They're top secret. The FBI would be coming after me. Not really. But the one of the Rich, I think you're frozen.
No, no, no. I'm
Oh no,
just.
you're very focused. Wow, man, that is a definition of focus. You were
You should see me at poker table, unblinking.
I think you stopped breathing for half a minute there. I was ready to call 911.
Bated breath.
All right, so coming back, yeah. So what I would do, Peter, I would, the simplest thing is to just increase risk. But that's probably not the wisest thing for your account, for your longevity. The other thing you can do is you can tweak your profile, your risk reward profile, meaning that you have it will give you lower win rate but higher risk reward ratio, but you will have those big wins. And even if they come um, not so often, whenever they do come, you will reach your daily target. So you'll have maybe once a week, maybe twice a week, or maybe even less, but it doesn't matter. But you will have them, and in a couple of weeks, you will have enough profitable days if that is what you're asking about. I would. I don't like to have rules, external rules, dictating, what is the optimal profile for the strategy that I'm trading, because I want to have the only in my mind, the only justifiable choice is the one that has a higher expectancy, that is optimal in terms of maximum drawdown and so risk adjusted return. Those metrics should guide us always, and not rules. So I don't like the fact the advice that I just gave you, but that is the only way I think that you can do it, which is by changing your profile to fit the program that you're trading, the prop firm program that you're trading, which is not ideal. But I mean, hey, you already have it, so you're not gonna throw it away. You want to make the best of it. So thank you for that question, Peter. Wise, very intelligent, Peter, by the way. Let's check some other questions we have here. Peter has a follow-up question. I didn't see this before. Peter says, should I play defensive on every profit generated, i.e. tight entries with high risk reward, or offensive? Well, you know what, Peter, it's just a matter of framing this, because tight entries with high risk reward, it can be actually the offensive thing. Defensive is giving it more room. So it depends on your metrics and on your the performance you're getting, because there are certain combinations of parameters of every strategy that may be more profitable but less stable. For example, tight stop loss. Tight stop loss will give you um, certain times, certain period will give you higher risk reward ratio, meaning if you have a good run, it will give you a lot of profit, right? A lot more, but it depends on the strategy, but it may be unstable, meaning that at other times, sometimes it's very profitable and other times it's, you know, not, and it may be sometimes very unprofitable because you keep on hitting those stop losses and you're not getting through with the profit. So I would what I would do is I will compare all the profiles, all the parameters you can. I know it takes some time, but I think that's the best way, and choose the one that has the highest risk adjusted return. Meaning, you take the profit it gives you in a period, 6 months, a year, and you divide it by the maximum drawdown suffered during that period, right? And you want to have that's the best one, the one that gives you the most profit given the drawdown it gives you, right? Given the maximum drawdown it will sustain during the same period. I think that's one of the golden ratios, golden parameters, to our criteria to choose your filters, to choose the right profile in risk reward, the whether you do it more offensive or defensive. Instead of doing that, try looking for risk adjusted return, meaning the return divided by the max drawdown for the same period, and choose the one that has the highest ratio. Peter has some good level, very deep level understanding of trading. I like that. Let's take a look at some more questions. I hope I didn't miss any. Any few ideas. I have a few ideas for market using news, and the other is getting energy from noise. Man, Scott Watterson is on the roll with these ideas.
I'm muted. You're just sitting there looking at me like, open up your mic. Sorry about that.
No problem. No problem.
He says he's got a few ideas, but you can't just say you have a few ideas and not share them. So share your ideas. Let's hear what you have to say, Scott.
Actually, those are the ideas. Market using using news, and the other one is getting energy from noise. They're very.
How would you go about it? How would you you incorporate it into your trading? How can we use it as well? Like, tell us more.
Yeah,
you've piqued my interest.
Share it with us.
Yes, sharing is caring.
One question here, very interesting about AI. I saw it, and it is. Let me see if I can find it again here.
From Unbiased Trader?
I think it is, yes. From Chat GPT. Let me see where it is. There we go. I got it right here. 21 minutes ago. Yes. Have you tried ChatGPT last night? I was working on my back test on US stocks, gave baseline strategy, risk, and market based on two time frame. It gave me very good suggestions. Have you, Rich? Have you used um, Chat or any of those models out there, AI models to use on your trading? I have.
I have not known.
Yeah, I have. What I've seen is um, you at least maybe this will change in the future, but currently and at least with ChatGPT, ChatGPT tends to confabulate or to um, fill in the blanks a lot, and that's not how you can't do that when you're doing back testing, when you're doing scientific research. You have to be precise, and you have to stick to the truth. You cannot fill in the blanks because it sounds because his predictive models tell them that it's likely to be the right answer. I was doing a couple of I was giving a Chat GPT a few backtested results, and giving him some prompts to change some parameters, and give me and tell me how this would change the results. And the results that I got were imprecise, or more frankly, incorrect. So
Got it.
I'm very at least at this point. Maybe this will change in the future, but you know they can mislead you into thinking something. For example, a couple of times as well, ChatGPT had an gave me an answer that I thought was a statement, a measurement, but it was actually hypothetical. So that was what I think the answer would be. I didn't ask that. I wanted the actual measurement, and
Mm.
but it presented as a measurement. So it's I don't trust it in using doing measurements. I want to have something that I can rely on that will not deviate from and will not predictively fill in the blanks. Um, so I would still use it, but I will be very careful, and I will double check. Not perhaps not every step, but double check at some point that everything that has been built in and has been used or has been given as answers are based on real data and not on predictive models, because that's how they work, right? They have a predictive model to know what is likely to be the right answer, and that they gave you that, but um, that does not work for when you're doing actual experiments and scientific you know measurements.
I think there's something
Um,
also to realize about ChatGPT and large language models in general is that they're source based. So the information that they're trained on is information that's out there, and you as the enjoyer of ChatGPT don't have control over where this source data comes from. So your input, the question that you ask ChatGPT, it's going to go and find the most likely answer based on the question, but also based on the sources that it has available to it. And because you don't know where these sources necessarily come from, that information might not be particularly accurate because it's not based on objectifiably researched, cross-referenced data. It is sometimes just opinions that people have dropped onto the internet, and then this large language model has drawn from that speculative information. So it's not empirical evidence-based information. It's sometimes just factually incorrect, just straight up.
yeah, Unbiased goes on to say, I amended my strategy as per suggestion. Win rate improved. Just luck with ChatGPT. I would think the better is knowing the strength of these models. I think that's a great area, the great way to use it. to make it give you what it thinks would happen if something would how you would adjust a certain characteristic of your strategy, and not actually let it measure anything, right? So it will use collective knowledge to give you some good advices as how to what part of the strategy you can change, but not have it do trying back testing itself. Or perhaps, and actually there's a other um, models for that, other EA agents for that are better than ChatGPT. Let me check the. We have a couple of more. There is what does the bottomless or wickless candle on the H4? I saw that too. What does that tell you, Rach, on EU? I think it was EU. Was it? No, it wasn't EU. Maybe it was on H1. Yes, that was it. It has a very tiny, if not almost non-existent, lower wick. Does that tell you something? Is that part of the non-aggression behavior of the move?
Yes. So the as opposed to this one over here that has the wick at the bottom, wicks to me generally, but not always, signifies a little bit of we tried but we failed. It's usually it's not a conviction to me. If there's less wicks above or below, it's more of a convicted move, in my opinion. But once again, not always. It's not. It's I wouldn't say it's the norm, but it's also a bit more telltale that imagine you have a wickless move during a trend, so something like this. So you have a wick below but no wick above. It means that to me, price attempted to go lower, failed, but just when it pushed up and closed higher, it closed with conviction. Now, once again, it's not always the case, but it's more often than not if you have a lot of wicks around a small body that it's a little bit more indecisive in terms of direction, let's rather say. It's more indecisive in terms of I want to go bullish or bearish. It could mean that I'm more decisive in where I am right now. I actually want to be in this area specifically. So it's a little bit more sideways action when you have a lot of wicks above and below. But if you don't really have a wick, if it's wickless, this one has a wick, it's just incredibly small. If it's like this one where you have zero wick above, this specific, I don't know why I'm pressing on the screen. You can't see my hand going towards the screen. So I'm when you have one, like the one that's just to the left of this one, where you have zero wick above, to me, it's more of a convicted move. And in general, I would look at that more in conviction. That's why with this hourly candle over here, you have this big wick above, especially seeing it as it's in an area where it's had a reaction before. It doesn't seem all that convicted, but that's why I'm waiting for the follow-up. I'm waiting for the very next candle to show me its intention. Where in this case, there was very little wick above it, but we had come into a very strong area which had not been tested at all for quite a long time. So the reaction that we had here was telltale. Okay, we came into it, even though it was convicted going into it, when it reached it, it lost its conviction and started pushing lower. That's what's going on here is we've already had a singular reaction already, and this is the secondary reaction. So I would not expect it to have a move like this one after a first touch. This is effectively a second touch after a base area where we've had a downward push. So that's why I was interested to see, especially on the hourly, whether or not this was going to have follow-through, conviction, to push higher, or if it was going to dwindle, have sideways action, and then decide to move up. That's what that meant to me. The wicklessness underneath, or well, smaller wick underneath this hourly candle doesn't really say much to me right now, because it's the wick, the wicklessness of it is in the opposite direction of the candle's movement.
Yeah, I was gonna say, yeah, the wick on dynamite is a bit more explosive than the wick on the candle, but it has nothing to do with trading.
No. But it does tell me quite a bit about if this one was red, you would have seen it as dynamite.
All right, we have some great questions. Scott Watterson has a program using the speed of the difference to give you an edge. Difference of what? I'm not sure. The speed of the difference. Maybe it was something that, because this was given 13 minutes ago, so it was probably something we were talking about. Speed of the difference between one thing or the other. That whatever topic we were discussing back then. Happy to share. Yeah, that's good stuff, man. I'm not sure. The best place I suppose would be in Discord to discuss some trading ideas and programs and collaborate together with multiple, with other traders as well. So I would assume I would, suggest you check Discord for and let us know if you want us to look at it and give you some feedback.
Yeah, it's difficult
Let's
to
see.
you'd really work through something just in the small little chat box that you have. It's a lot easier if you
Yeah,
can have like a full conversation and explain
exactly.
detail in something like Discord as an example.
Yeah, and with visuals, with screenshots and all of that. So Discord it's probably the better place to collaborate or work together, or at least just take a look at it and give some professional feedback, as you said, on it. Um, Someone is asking, why are we not trading? Why are you not trading, Rich? Rich, what are you doing? Why are you not trading? Am I not trading? Supposedly, according to this person.
So I don't know. Maybe our viewpoint on what trading is might be a little bit different, but not trading is also trading. On me and I specifically, I already told myself that I'm not going to be trading again today after the trade that I had this morning because we had high impact news. So I'm not trading EU and GU at this point in time. I am solely focused on the NAS for a potential. So this red line is the New York Open, which is where we're now, which is what I was waiting for. I was waiting for New York Open. So that's why I'm not trading, is because was at least waiting for New York Open. So now I want to see what New York Open is doing with the NASDAQ. And if something presents itself, I may or may not decide to get into a trade. So that's why I'm not trading right now.
Yeah, in the case of my main strategy, we are. If you look at it on let me give you some ideas. We are. Let me give you. Well, if I give you the reasons why I'm not trading, I will give you some proprietary rules. So let me try to give you some. I mean, the reason is that, am I showing my screen? Yes, I am.
Yes.
The reason is that my strategy, my trade plan tells me exactly when and how I should be, in what direction, of course, and what I need to wait for to get into the market. And I'm not getting, a signal. And I don't trade just to trade. I only follow my signals. I trade my trade plan all the time. At least that's the initial and constant intention that I have. I have been trading. I have been taking scalps with the move, but I normally, took shorts from here, and as we were going up, I think while we were talking, I took a couple of trades, longs here, and I'm actually took another long here as well. But I think I'd rather stick to the main strategy, which is applying patience, because it's quite selective, and I need to wait for certain things to happen, and if not, then I will not be trading. I think that's much more helpful for someone who's watching us and wants to learn how to trade than me showing the scalps, because my scalps are, they're in my mind, they're gonna, because they're a bit more fluid in their, and using a lot more discretion, they are probably not going to stimulate patience and waiting for certain things to happen. And I want to be that example. So I don't share those as much. What I do share is the actual strategy on the main strategy, and that main strategy hasn't given me any. We are in an H4 order block, but it hasn't given me any signals. You got you have a 2 hour. Let me show you. It's still fresh. All right, so you have reasons to go short here. However, let me mark it. Right, so we have reasons to go short here. Right, let me mark it with some horizontal lines. Right there. And I think it was on the 4 hour right there. However, if you go to the lower time frames, the 5 minute does not give me a quasi, right? I need the quasi to form for me to get in, and based on a order block, right? A entry order block that has a couple of other criteria to comply or to meet as well. That's not happening on the 5 minute. There is no quasi pattern according to the rules that I'm using. If you go to the 3 minute, the quasi line is all the way down here. If you go to the 2 minute, it hasn't been broken. That means the quasi line is still here. And on the 1 minute, we have the 1 minute, it's right there. It hasn't been broken either. So in all accounts, I don't have a reason to go into to the trade. I don't have a signal. And when that happens, I don't trade. And it's actually that's properly trading, not trading, because I'm not going to be trading outside of my trade plan. I'm only going to be sticking and doing what my trade plan tells me to do. That's why I have a plan. What's the use if I have a plan and I'm going to be trading, all around the place, all around the signal before or after, and not actually only the signals that need to be taken.
Yes.
So that's the reason that I'm not trading. It's basically the same as yours, Richard.
Yeah, yours is just more clearly explained than mine. Mine was more, I don't want to, I don't want to trade right now. I'm waiting. Yours was actually explained via the process of your own trading system.
Unbiased trading, coming back to the question or the answer that I gave. Yes, that's exactly the way to use the ChatGPT. You use the whatever suggestion it has, because it has a lot of knowledge where it's trained on. So the potential for it to give you some really great answers is very large, but you want to check back that the backtest supports what it's telling, that it's not doing just giving you predictive answers, because that's not going to help. So it needs to be actual suggestions that will move the needle on the relevant parameters and the relative metrics, which are the risk adjusted returns, for example. When you're seeing that pattern happening, then you can trust, and you can keep on building that collaboration with chat within, and incorporating it within your trading. But if not, you should stay away from it, because I've seen it make statements that are completely wrong a lot of the times, and you don't want extra noise and things that are not based on facts in your trade plan.
Yeah, I would also add, don't just blindly follow anything just because a reputable source has told you that it is fine to follow. Do your own back testing. Make your own analysis be the one that is the decision point rather than someone else's analysis.
No problem, Scott Watterson. That's Discord is a great place to work together, learn, and meet other people who are in the same process and are likely to maybe be interested in having a partner, someone to spar with, because they're doing the same thing, and that's what you want. And it can be one person, but it can be just a group as well, right? You can start groups and work together and learn from each other. All right, let's take a look at the market so far on EU, maybe on GU. What is the GU doing on the daily time frame? Do we have anything there? We reached the area already they were talking about, um, and we're reacting, bearishly from it. We talked about this, the order block being gone, being blasted through. That happened already. We had the uh, area here on the H1, which is part of the quasi. Let's mark that. So the daily doesn't have anything, right? Except the fact that we're on a higher time frame, a daily quasi entry order block from the left. The H4 has a bearish quasi pattern, this being the head, the neckline, the left shoulder, either that or, yeah, this is the left shoulder. That gives us this as the neckline, but this is, to me, this is a valid neckline as well. It broke the neckline, and there's only one area where it can react from, and it is reacting currently from it. So these are the two targets. Reached the first target already. Let me take this away. So the first target is, by the target, I mean those who entered long from this area, right? The bullish quasi that we have here, price came back all the way, right? This is the head on that quasi, the left shoulder, the neckline, it breaks through it and comes back, moves away from it, and this is the first area to be expected price to go to, and eventually the second one, it hit the first TP. But now that we're on the other side, you have this quasi, the one that I just talking about before, either this one or that doesn't really matter, being a possible area where market could come back to and react from. So you want to be looking for signs if the market is successfully, although this one candle is very convincing, meaning it's not going to give away easily and it's likely to continue going further. I think eventually the market will go higher, but still there's a good chance of a good reaction because of the quasi that we have on the H4, the daily order block on the on the bigger pattern, the big quasi. Let's go to the H2. We already have it marked here. That's the overlap, so we can actually move the line, or actually use a different line, which is this, right? So as long as the market gives you a quasi on the lower time frames within that area, that's not a big area, so that's nice. From 23, 34, 23, 4, all the way to 34, 36. So that's how much? That's 13, almost 13 pips to look for that quasi, for that reversal pattern, to see if we are going to have that reaction, right? Because the quasi happening on those time frame is one of your best indication for a possible reaction, eventually go up, but you can trade the reversal of that area. Let's go to the 1 hour. Nothing there. On the, this looks very, very bullish. I don't want to be shorting this.
Nope.
Look at that. That there's no reaction. There's on the 5 minute. Where's the neckline? You go back from, this is the head. Where's the neckline? Neckline is all the way here. There's no neckline. Basically this is so bullish. It's not, creating any necklines at all. All right, so now you have on the 3 minute, there is a neckline here. So I would stick to, okay, so the 5 minute is very, very bullish. There is a quasi here on the 3 minute. And you have one entry order block on the 3 minute here. But because it is outside of the area of interest, I would not trade that. This is the area of interest. So I would want to only take the trades that are within. Let me double check that is within the 50% retracement. And it is right, nicely inside. So this is then considered the left shoulder, the head, that is the neckline. And right here, Price goes through it and comes back. I would want to wait for price to have a reaction here. This one can be as well, but I won't trade that. I would only trade this one. So I would move this away and only trade this right here. This as the only possible area. Let me mark this as just a regular 3-minute order block. Template apparently did not kick in. Well, it doesn't really matter. So yes, so this is the area that I would want to, on the 3-minute, to look for the reaction. And if it doesn't react, let go of it, because it looks very, very bullish on the 5-minute. Right, so a valid signal is a valid signal. I'll take it, but given experience, I know, and probabilities, I know that this looks very, very likely to eventually go break and continue higher. So we'll have to see that. That's on GU. Well, how is the NAS? Now is the market open? That is open, Rich. How's NAS doing on your side?
It has opened on that bearish base and started to push lower from it, that previous arm wrestle point.
Okay.
Just wicked into it and started pushing lower. So what I am looking for now is I want to see market change its current bullish structure into a bearish structure. So this base area over here, let me use this arrow. I like my arrows. This was that area that I referred to earlier, the base area. Price, due to the news, pushed it into it. Very big wick above, but this is the opening candle of the New York session. Usually there is some higher volume that comes in, a little bit more volatility. It's tried to push the price lower. We have a recent swing point. So during this upward bullish move, we had a bit of a base area. So price tried to break the bullish momentum and then failed on this candle, pushing it into that area. So we have a little bit of a base area, which now got tested. So we have this as a high point of the day, which was the highest point that price has made during today's movement. We have this area of consolidation down here. It's not true consolidation, because there is slightly higher highs and higher lows, but overall it's muted movement. So we have a base area, price has pushed above it, wicked into this higher time frame or previous base area where it had a strong reaction from off. Now it's reacted strongly as well. So what I want to see is I want to see follow through. I want to see price try to push higher, fail, and then show that it wants to push lower yet again. So I want to see what do I want to draw? I want to draw this. I want to see price try to push higher and then fail and then start pushing a little bit lower for a potential continuation lower. So a slightly skewed M structure over here. So if this is the one leg, basically, I want to see this as the middle leg and then a failure to make a higher high and then an attempt to push lower. And then what I would do is I would potentially look for an entry point over here. I would go towards my New York strategy, which is something like this. And then hopefully I can get a trade something like that. That's if, and only if, this candle over here, this bullish candle right now, which is 2 minutes left, does not go and take up this space up over here. So if it goes back and it enters back into this base area, then it means that it is most probably just a deeper pullback than normal and then a continuation. So if it's got a secondary bullish candle that pushes back into this area, then I know that this area over here is now no longer applicable and that we will most probably try and break higher from here. And then what I would look is I will change my bias to a bullish buying, and then I would look for the exact same but in opposite. So instead of a slight little M structure, I would rather wait for it to produce a inverse W, well, a W structure. So from there, I would want it to try and pull back a little bit and then continue higher. And then I would then flip this to a buy, and I would look for something like that as an example. So I'm just waiting. I'm just waiting for this 5-minute candle and then the follow-up 5-minute candle to show what it wants to do. And then I will probably enter.
Nice, right there. So you're looking to short NAS for going into that supply area. That's going to be a target, as we can see on the chart. What exactly are you waiting to pull the trigger? You want it to reach the supply area again? Is there any specific candlestick combination or base frequency you want it to produce? Some octave or something else before you start getting your guns ready?
So if I'm just looking at candle patterns, I'm looking for a 3-1-1 pattern. So I'm looking for 3 bullish candles, 1 bearish candle, and then a bullish candle. But what I'm also looking for is how strong is that middle candle. So the 3-1, the very first 1 candle. I want to see how strong that one is. So as it is right now, it's come back to wick into this area, and it seems as though it wants to print a bearish candle, but I will only know in the next 4.5 minutes whether or not it actually wants to print a bearish candle. If it does print a bearish candle, then this basically just becomes a inverse test, break, retest, continuation lower. But I don't feel like this is what's going to happen, because this base candle here is much too strong. It's too much of a bullish candle for me to feel like, okay, if I'm going to enter here for a buy, let's say hypothetically, for a sell, sorry, not a sell, a buy, sell. Let's say hypothetically it closes right over there. My stop loss is going to be somewhere, okay, let me just do this. My stop loss will be somewhere over there, as an example, and it doesn't fill me with a lot of confidence that there might be a follow-up bullish candle, as an example, because it's so strong. Where if I compare it to this move over here, when it came back, look how small this candle is in relation to what the movement was. So if this candle over here completely took this whole movement, then I would be less inclined to want to look for a sell, as an example. So that is what I'm seeing here right now. Is this push that we had was strong. The reaction was strong as well, but the follow-up was weak. This follow-up to try and dissuade more bullish movement is weak so far. So I would be very, very, very careful in deciding to take a sell from here right now. Even if this one closes as a bearish candle, I would be less inclined to look for a sell immediately. I would want to wait for price structure to slow down a little bit, do something in the line of consolidate a little bit, then try and break, retest, and then continue. That's what I would rather go for. If this were to close now the next 2.5 minutes as a bearish candle, and I do take a trade, it's most probably going to be a lower probability setup. But it's all to do with the size of this candle in relation to the move itself. I think it's more than 50%. It's retraced more than 50% of this downward move. So I'm already skeptical as to this being a follow-up for a sell. It looks more like it wants to continue bullish from this point. So the reaction from this area, which was this base area over here, is not the same as the reaction that we had. I would have wanted this reaction as a follow-up, but we're not getting it. So I am most probably going to be for buys.
You mentioned before that because of the news, you abstained from taking a trade. The news being the interest rate decision on the EU, as well as the CPI on the dollar that came out later, after I should say. How long would you not trade? How long does that abstination apply?
Oh, the rest of the day.
The rest of the day.
So if we have, I would trade before the news, but not after.
Okay.
So today we had GU news this morning. I did not trade GU this morning because it's too early. The news was 9 o'clock my time, which is an hour before London session opens up. So it's just okay. I don't want to trade at that point in time. But generally, what I do is I give, after a news event, it time for non-volatile movements to take over. So I want to see consolidation and then a reaction after that consolidation. Because to me, this is like an emotional reaction. Even though it's not an emotional reaction, to me, it's like it's an emotional reaction. I want it to calm down and think clearly about the reaction before continuing.
I see. But that's the NAS you're talking about. But if you put the EU, do you think we're still just retracing the emotional reaction of the news, the exaggeration, and we're getting back into what would be fair value, or not?
Not necessarily that we're only reacting on this emotional movement. Not necessarily, but I want to see it slow down first. There's the right kind of volatility. I'm looking for the right kind of volatility. If I decided to take the continuation of this move, it may or may not be in my favor. But if I wait for it to slow down a little bit and then give a follow-up movement, then I know that there's a higher likelihood of it going in my favor. Just from my back-tested data. I don't want to react emotionally right now because I'm fearing of missing this move. So I would rather wait for it to calm down and then I'll decide.
And what is the right kind of volatility? How would you describe that?
So the right kind of volatility to me would not be massive wicks like this above. I would want to see something more in line of this. As an example, if I had to compare this event over here or this full movement to this movement over here. Shorter time frame for these movements, and they're sharp with sharp big candles and big wicks above, where this area over here we have downward pushes, but there is areas of consolidation in between. And then a continuation to push lower, where there's very little consolidation here in terms of its volatility. In terms of its volatility, it's a sharp upward movement, sharp decline, sharp upward movement, sharp decline.
So you're saying you want clean directional moves and no big wigs in comparison to the structure. I get that. That makes a lot of sense. Yeah. Awesome. Yeah. I like that, Rich. And I don't know how, but we got to the end of the stream. This is when did that happen? I thought it was we still had like 2 hours to go. Someone moved the clock.
The thing is, Victor, when I'm ever on stream with you, there's no concept of time. There's just no concept. It's like time flies. It's like, where did it go? It's always enjoyable spending time on stream with you. So I'm flabbergasted by the fact that we've lost 2 hours. Where did the 2 hours go?
Before we go, there's someone who's asking my ideas on EU. So let me go through that for, if that's even possible, for about 2 minutes, and then we'll close the stream. Let me switch back to my screen. Yeah, so what we have here is on the left, we have an area, right, where there is a reversal pattern telling me that the market should want to go lower from this area, but it didn't do that. Not only it didn't do that, but it went on to reach the next level. And once it does that, I automatically understand that this is the area that I need to be watching, and the current area isn't anymore the one. So that tells me now that we have reached a supply area above, but we're not there yet. And I want to be taking my trades based off this. So, and we did have a beautiful wick. That's all in the daily time frame. We did have a beautiful wick, but that does not give me enough reasons to go short on the higher time frames. If I go to the H4, you can already see where I'm going with this. There is a quasi. The quasi line is right here. We did create a quasi. So let me mark it as such. But where is the entry order block on the H4? If this is the area that we reacted upon, and the reversal pattern is this, where's the H4 entry order block on the quasi? It's not there. It should be between this point and that point. There isn't anything for me to get into a trade since my alignment would then be broken. There is no H4. There's no base for that day trade. So that leaves me with no quasi, a supply area on the daily above that I think is the one that is making the market move. And we do have areas here, and in between we have a nice reaction from this bullish H4. These are just fresh order blocks that I also trade, but they're not the quasis. And in between, I want the market to show me first what direction it wants to go before I can participate. If not, then I'm gonna be trading within the range, meaning I'm gonna go long here, short there, and just taking it from one side to the other. But it hasn't triggered me yet. So going long from that area to that order block and short from that one to the other one. Those are the two ideas that I have. Because of the news, I wasn't able to get into the to a trade. This is not a I'm ready to go short here, but there wasn't any trades to be taken. Same as on GU. It hasn't broken any structures on the lower time frame, so that leaves me with basically me sitting on my hands for the time being. I am trading. I am scalping the market, but that's a different kind of approach. I think the one that helps the viewers more is by breaking down top down with clear structures in and reading the market, how it creates or invalidates these new structures, so you can have a reading as to what order block and what quasis are likely to work. So what am I? What is the conclusion here? Well, there is a we are in a let me get these out of the way. There is a supply area that is interesting. We already reacted nicely from the bullish H4 order block below. I would be interested if, let's say, by tomorrow we come back to this area to go long there. That's not something that we could be looking for today, but for tomorrow perhaps go long from that area if we have a nice reaction. And today I will be looking to go short this area, but there's no on the lower time frame. The market is not giving indication that it's not reversing. It's very strong. What it's likely to be doing is you likely have a continuation at least for some time, not perhaps an explosive move, but a continuation and breaking that area. And that's a good sign as well. If it breaks it, then we know, okay, so the buyers are in control. We now need to go look for a demand zone, and whether it's going to be this one or some other, that's to be seen in the future. But those are my ideas on EU. And for the swing trades, I would like to wait for the market to reach this area again, the daily reversal or the entry order block on the quasi, for me to get a possible area of a reversal, a possible swing trade, because it's a daily. So that's very interesting as well. The market being very, very impulsive, very technical here. So I would like to see if the market sets up and I can perhaps take it to the opposite order block in the same time frame, which would be this order block right there, and eventually the other one below us. That's it on EU. Hope you guys enjoyed it as much as we did. Richard, you're funny as always, and it's a pleasure, being here on the stream with you. Any last words for our viewers before we get to some closure on the stream?
Only thing I would say is, guys, do not forget about Monday's forecast for 2026 that Trade the Pool and the Fivers have put together. It is the link is in the description. You guys can go and join that for a chance to win so many giveaway things, $2 million worth of giveaway stuff. But not only that, you also have the sheer amount of knowledge and experience for that event for the people that are going to be presenting on Monday. That's going to be the whole of Monday. So check in the description box for that. And other than that, everybody go and join Rich's afternoons or evening session in Discord, for those of you that's in the Discord. For everybody else, I'll see you all on Tuesday.
All right. On that note, let us wish you all a happy rest of the day. Take care and see you again soon. Bye-bye. Hit the like button and subscribe if you like the stream. Goodbye.